1.61 billion versus the 1.71 billion. I want to highlight what's happening in Macau. The operating.
All right, guys, what's going on? It's your brother African Emporium, late to the party, but I'm here. Oh wow, stocks already just dropping. Stocks already dropping. I'm late a little bit. I was trying to get the live stream up and running, and again, you know how this stuff go. I haven't been on in a while, so it's good to be back and with the family here. Let me share my screen quickly here because it's getting it's popping already. All I can say is it's popping already. Wow. All right, so let's see here. Wow, so WYNN already messed up. I got WYNN short in the earnings. Hold up, let me share my screen quickly. Wow. I was trying to hurry up and do it earlier, but you guys know my situation. I just moved into the new home. Again, just all over the place a little bit, trying to get stable. Again, I'll get there at some point. Just bear with me. So again, everybody's waiting on the numbers, All right, so okay, so Square just released their numbers. Let's see, Square.
With the details.
Okay, so Tesla beat.
Attention to shares of TripAdvisor, which are down now about 8% here. And after
I got puts on Trip. I do have puts on Trip.
Revenue missed Wall Street expectations. 400.
I got puts on Square. I'm short WYNN and also short X Steel. Obviously, I was shorting Tesla. Y'all know I was shorting Tesla. But I made a ton of Tesla already, so I figured, if they get me, on the earnings, that's fine. It's not fine, but it's fine. Oh, big drop on Square like I figured. Oh man, those puts gonna be juicy tomorrow.
11.5%. Analysts have also been citing fierce competition with Booking and Expedia.
So I'm short WYNN. I'm short Square. I'm short Trip. I'm short Tesla. I covered out most of my Tesla today with a big profit, and I left some in for the earnings. So right now you see Tesla's up. Obviously, it's struggling here. This 308, 309, 3010. So be it. We figured, the numbers of the Model 3 will be light, but we'll see. So TripAdvisor was a really, really big one too.
Tesla numbers just hit. Phil LeBeau has them for us. Hey, Phil. Well, it is a loss a little greater than what was expected, a loss of $3.06 per share last quarter for Tesla. The expectation was for a loss.
Okay, so they missed. Tesla missed.
The estimates were all over the place. They were moving around quite a bit in the last week. In terms of revenue, came in right at $4 billion, just a smidge better than expectations. So why might shares be moving just a little bit higher right now as people digest these numbers? $2.2 billion in cash is what they ended the quarter with. 5,000 Model 3s per week is the rate of production.
Oh, yes. That's why I figured them numbers going to come in light. I knew them numbers going to come in light.
For some people, but that's what Tesla is saying. It also expects to achieve a production rate of 6,000 Model 3s per week by late August. But again, Tesla shares, as you're looking at these, are going to move around a little bit, but they did beat the street. They had earnings.
So Square must have did pretty decent. I see it starting to spike back up. I had a chance to really digest the numbers. Let me see, because I'm trying to get to all these press releases. I'm late. Second quarter revenue, financial results for the second quarter, blah, blah, blah. Square will host the conference call, blah, blah, blah. No, we need to see the numbers.
It is, and I think they've kind of lost the benefit of the doubt a little bit, obviously, in the last couple
business.
of quarters.
So I don't see announcements. Okay, hold up.
So I do think cosmetically what Phil hit there all makes sense. Revenue.
Square will host the conference. No. Where is it?
A week. But they do also caution that they'll need to get several production lines.
Yes, on Tesla. Yes, on Trip. Yes, on WYNN. I'm also short X Steel. We know the tariff's going to kick there behind. Some of the stocks I still have up there with just tiny positions after I covered off most of my positions today or sold off. So I left a few. Y'all know how I am. I let my runners run. So I left tiny shares in, like 25 shares, 50 shares, something like that. Like I was the Apple. I took Apple on, crushed that. And a few others I had too. I shorted Caesar twice. I went long on it, made about $1,000. Then I shorted from 10 all the way down to like 965, covered. It shot back up again. Then I shorted it again. I shorted it like 3 times or 2 times, and went long 1 time on Caesar. You all know the weird news on that. Okay, so Square is the only one kicking my behind right now. I think Tesla gonna die. The news digest on Tesla a little bit. I think it's gonna come back down. So basically, what you see here after I was real on my unrealized is all the stocks I have going into earnings. I already covered off most of all my position earlier with a big profit today, and this is everything that just pretty much just running after hours. All right, this is all after hour movement. Obviously, you know, I trade several accounts. They are pretty much mirrored at this.
Burning of cash as well, Mark. What stands out to you? Just want to bring in this production of 50 to 55,000 Model 3 vehicles in Q3 is what the company is now expecting. Is that good enough?
So they had adjusted loss of.
Is what stands out because it was promised here in the second half of this year, and now he has 2 quarters left to deliver on that. And should he come up shy on that?
So where are the numbers for? I don't see the number for Square. Where are the numbers for Square?
And or misses the 6,000 Model 3 production run in August. This is beginning to accumulate.
Second quarter results, earnings will be.
To a show me situation.
Oh, you got to go through all this press release mess instead of just posting them on TOS.
I wonder if perhaps that story is going to lose a little steam pretty soon, and investors are going to turn the other way, which is going to be
big drop on TripAdvisor. Though I figured they was going to miss. I got puts on. I got a few puts on TripAdvisor too.
We had sold it at the end of last year, just because we got to the point where many investors are now, which is the show me.
Where are the numbers? Okay, don't worry about it.
The personality
they must have beat.
adorable in the beginning.
I have to go pull it up another way, and I don't want to mess up
Charlie Sheenish.
my live stream to go do that.
The burn was expected to be,
sharing the screen at this point.
And we thought they'd end the quarter, with about, I don't know, about $1.5 billion in cash. So the 2.2 is pretty good. And I think it does show progress, but the question remains if they can scale this thing. And, a lot of the estimates are.
I don't think Square beat.
15 billion.
I don't think they beat. Because everybody knew this thing was at a double top #1. Then the numbers were competitive, in the aspect of Apple Pay. Apple Pay obviously crushing PayPal and their members. And we knew that, that would be a major problem for a lot of these other merchant services, obviously, a la Square, even though Tim Cook spoke about Square. But, again, we talk about a market now where it's becoming saturated with others. Venmo, free merchant service, obviously you don't have to pay like you do if you're using Square. Again, Square is still a big major. I use Square for my business. I'm not saying, but again, we're traders and investors. We look for price action, and we play volatility, be it up or down. So it's never personal. Wow, just keep dumping Trip. Yes, keep dumping Trip. Nice big short on X Steel too. Again, we know those tariffs are kicking the steel, steel's behind right now. The steel market behind steel industry.
We've got an earnings alert now on T-Mobile. Leslie Picker has.
I didn't trade T-Mobile.
We've got a beat on the bottom line and a miss on the top line. And despite that, the CEO, John Ledger, calls this the best Q2 in.
Okay, so they beat on earnings per share and missed on revenue.
The shares are actually trading higher.
Come on down, Square. Come on down, Square. Something telling me y'all didn't beat. And I don't want to go looking for the numbers right now because I don't want to mess up the live stream. Okay, here we go. I see some numbers. Sales were 407 million. Okay, the estimate was 384. Sales 152 billion versus 1. So they came in close about near in line. Tesla's spiking on guidance. The numbers suck on Tesla, but it's spiking up on the guidance. The guidance is the only thing probably keeping Tesla on. It's possible inflated numbers like they always do, cooking the books. But I see it spiking back up, so they must have had a decent guidance, or they cooked the books enough for the guidance. Come on down, Square. Stop flirting, Square. Come down, Square. Them puts gonna be super juicy on WYNN. Them numbers are gonna be super juicy on WYNN. Excuse me, not WYNN, but Trip. But also the short on WYNN looking nice. So again, about up after hours. Total roughly about 2 grand or so, a little over 2 grand.
Into this wireless industry
In value. Come on down, Square. Come on down, Square. We'll worry about Tesla later. Tesla just gonna have this old ignorant moment. There's diehard fans over there at Tesla. Come down, Square. Stop playing.
Because in theory, it's great for customers if you have this disruptor in there trying to keep competition, very heated.
I guess not. Them numbers must have been pretty decent. They must not decent, but they might have been enough to keep the asset from just outright tanking. I'm seeing a lot of buys coming in too. Somebody just bought 2,100 shares of Square at $67.25.
I don't know.
Nice. Hey, it ain't moving a ton up. I'll take that over it being, skyrocketing up above 69. Here we go. Square. Here we go, Square. Break VWAP. Break VWAP here, Square.
I like the numbers. I thought Sprint had a decent quarter. I have no idea.
Wow, this is why I love earnings. I mean, the adrenaline alone is like stupid awesome and fun. Again, Uncle Jocelyn to everybody, Power and Profit. I know I'm late. I didn't get a chance to welcome everybody in. Forgive me for that, guys. Y'all know my situation. Just moved into my new house. Barely got the internet up and running. Still got a lot of tons and boxes to unpack. Stuff all over the place. In the garage, upstairs, all over. I got put stuff in the attic. But again, now I got to find a way to make this thing happen. I got to get back, focused a little bit here. Again, can't wait back to start the training again to all those other things we're going to do. Live day, trading values, and where we're just going to call out some plays to help them trade in and out. A lot of stuff in the books, basically. Just got to get, found data. Y'all just give me a couple days to get, the rest of this week. When this week ends out, I can get stable a little bit. And we'll be back to, doing what we were doing before, guys. It's been a long 2 months, guys. That was like a 2-month, stint where I was really away. Because you guys know, when you're buying a house, it's never easy process. It takes a lot of time, a lot of, meticulous nature and being on point with information, everything. Here comes Square. Come here, Square. Come here, Square. Come here, Square. Stop playing Square with me. Stop playing with me, Square. I know I don't play Square. Come on, man. I think flirting with me right now. I know I did the homework well enough. I ain't gonna say I did like I normally do because I've been stressed out, been super busy with all this other stuff. But I've done enough of the due diligence to give me the confidence to take that Square short. The same way I crushed NBIX today. You guys know I crushed it long. I played it yesterday in the earnings. NBIX. Apple, obviously, we crushed Apple.
But we're real pleased with where we are in terms of.
I straddled Apple for some of you guys know, and I took it long today. For 197 up into over 201 or 201. I think I showed it really over 201. Square is just all over the place. You know what? I'm just not gonna worry about Square. Forget about it. Either they did good or they didn't. The stock don't know what it want to do. If it want to sell off.
Didi Roy has the numbers for us. Hey, Didi.
Hi there, Wills. That's right. The numbers are in, and Square's revenues are coming in at $385 million. That is up 60%, and it beat expectations of $367.6 million. EPS 13 cents versus expectations of 11 cents.
So barely.
On revenue, that's coming in between 407 and 412 million. That's also handily beating expectations of 384.5.
So not bad.
The company did miss on Q3 guidance on
earnings. I knew it. I knew that guidance was going to be weak.
A few cents lower than the.
That's what I was banking on. I said, you know what, the guidance is going to be a little weak.
Full year guidance on revenue coming in above also, and full year guidance on EPS also a slight miss there.
So missed on earnings per share and revenue for Q3 guidance. I told you guys, pay attention to the guidance. Don't get caught up so far in the revenue anymore like we normally would, because the guidance is showing to be very strong and the value how institutional investors look at X must have beat. So X must have beat. X still must have beat on earnings. Wow, so they must have had good guidance too. They must have good guidance.
Holders of Twitter must be wishing that Jack Dorsey was splitting the
share. They must have good guidance.
Over his two companies.
Despite the tariffs, they're saying, hey, we're going to be able to still maintain here. And that's fine. It's not fine, but it's fine. that was really a YOLO play for me in X United Steel. I was just being the big front runner of the whole Trump scenario, the whole, make America great again. We're gonna build the wall. And I mean, right now that stock is just spiking up like retarded right now, spiking up very like crazy. And truth be told, I actually fat fingered a little bit of that more than I wanted to as well. But again, that's the game.
Adore the space because it's a growing pie and they're getting a bigger piece of it along the way.
Okay, great stuff. We'll leave it there. Nancy Tengler and Mark Lashini, thank you for joining us. Of course, Mike Santoni stays with us on set throughout. Up next,
come down, Square. We need you to come down, Square.
The earnings, they've been moving all over the place. They were down a bit. This is now up 4% or so. We will dive into those numbers. We'll have
so down on United Steel here about $500. Tesla spiking back up now. Tesla, guidance, man. That's all right. I made a ton off Tesla though. It's not all right, but it's all right. I made a ton off Tesla. I'm still obviously up after hours, regardless. That's what you call hedging, so to speak. It's like hedging. So also had Fitbit, guys. I don't know if you guys, I didn't get a chance to post that for anybody, but I took Fitbit as well. I had Fitbit long in the earnings. I bought the calls. I think I bought the 650. I think I bought the 650 call when it was pulled. It was like down like 584, something like that. 581. I think I bought it at 580. I bought at 580. I bought the 650s. I had to go pull it up again. Again, my mind been all over the place lately. Been very fatigued and under sleep deprivation. I mean, really no sleep. Okay, Square starting to rebound a little bit here. Not a ton. Investors still trying to make sense of what all happened. The numbers are good on the top and bottom value in terms of the revenue value that they done and earnings that they done for the quarter. Again, but the guidance is very weak. They're expecting a very, light Q3 report, which is also, again, affecting the stock from just really exploding to the upside off those numbers, because those numbers were actually pretty good. I mean, let's keep it real. Those numbers were pretty good. All right, here comes U.S. Steel. I mean, X, rather, U.S. Steel. Here comes X. Let's see if we're going to get some movement back to the downside here. So, again, overall, not bad here after hours. Despite Tesla being the one that everybody was just not too sure about. Again, maybe I have a personal vendetta for Tesla. Again, it's a company that's up on a lot of hype. They aren't profitable. They haven't proven to be profitable. I've been shorting the brakes off Tesla left and right, making, tons of money. And, this time I said, you know what? I'm going to cover. I covered all some because I was short literally from 309. My average was 309. Then I sold some. A good deal that I bought some back, which I shouldn't have, around like 302. Well, meaning I started shorting it again around 301, 302, somewhere around the 302, I believe. All right, so again, that's a part of the game, but I've definitely banked more than I'm up in terms of my loss at this point, because right now I'm down like what, 26. Not bad. What it could be, because obviously I had a big day today. In the market overall. So, I'm still balanced out because the after hours ones that I have that are winning, obviously WYNN and Trip is balancing out Tesla spiking up, because both of those trades are above $1,000 right now. And those stocks I had like 100 shares. I think I had like 75 shares short in WYNN, only 75 shares. And that stock is up $1,000 off those 75 shares. I had like 100. I think I had 100 or 150 shares of TripAdvisor.
Have been a little bit all over the place in the after hours after reporting earnings, now jumping to the highs of the aftermarket session,
which is all BS. People know those numbers are BS for Tesla.
Brad Gasworth from ADR Investment Strategy is bullish on the company, but Gabe Hoffman from Accipiter Capital Management is not. So, Brad, is the big takeaway for investors and the bulls here?
Here comes Square. Finally, come on, Square. Come, Square. Break this bottom VWAP line. Break this bottom.
Even the quarter with 2.2 billion, much better than people expected. I think a lot of people are expecting a bigger loss. expecting exiting in the $1.5 billion range and bringing more concerns of an.
I say that's the range Tesla trades in. It stays within this 330, 280 range. It's been trading in that range for the longest. And every time it peaks above that and gets above 330, it may test 350, but it always comes back within the range of 330 and play between that and 280. It's the most liquid day traded stock of all time.
The cash balance isn't all it appears when you dig into the numbers a little more deeply.
Right.
That's what I mean. The 2.2 billion.
Yeah, cash burn through the roof, man. They burn cash like it ain't nothing.
That is customer deposits. That is, it doesn't belong to Tesla. So the real cash that Tesla has, which it owns, is $1.3 billion. That's less, substantially less, than the current bills due on its desk, which soared $400 million.
I made so much money on that trip, those trip puts. I don't even begin to tell y'all what they're gonna look like tomorrow. As long as the IV don't get beat up tomorrow, here come X Steel, here come X. God, come on, X. I know the terrorists are going to kick U.S. United Steels behind because of the fact that they can't, really price any kind of substantial growth and purchase orders on the back end basis of not knowing what the tariff's going to be. That's a tax that they just unforeseen. That's a miscellaneous tax that you can't quantify. It hurts you from being able to make solid predictions about your book value. So again, steel, aluminum, that's exactly why I crushed Whirlpool. Whirlpool, a big proprietary value of using aluminum and steel for their wash machine, and they had a competitive market they're dealing with, and Samsung and GE. We knew Whirlpool was going to dump, and we made a ton of money on Whirlpool. I didn't even get a chance to even tell you how much I made on Whirlpool, guys. We actually did that Sunday show, and I told you guys, I was taking Whirlpool, looking to take Whirlpool after a lot of guys, we kind of discussed it all together. But I had four contracts, I think. No, it was 3 or 4 contracts of Whirlpool, basically. Anyway, but I made like $1,600 like dang near per contract. Let that marinate. And I shorted it outright in my account, naked shorted it too. Made like when it's all said and done, about $8,000 off that trade on Whirlpool. So we crushed that one through the roof. Come on, Square. I see you, Square. Let's break the low. Come on, Square. Let's get you a little lower. Let's get you down there 64. Let's get you down there 64. Come in, X, giving that right back. And I do think when they digest the numbers in Tesla, they're going to short it big tomorrow.
Those customers are buying Model 3s, so you have 420,000 people.
But that's just my opinion. I don't know. Tesla has a cult following. We know that. And it's bound to kind of just, bounce all over the place and whatever. But again, that's the game. That's the game.
Investors are going to give them that wiggle room.
So I'm not worried at all.
Brad and Gabe, both sides of the debate. Thanks very much.
Man, those Square puts going to be juicy tomorrow too, if this thing stay down, because it look like it just want to just turn around and just soar.
Good afternoon to you, Will.
Yes, what's those numbers? They beat. That's fine. But what that guidance look like?
On the bottom line, a monster beat, 1.46, $1.46 adjusted.
Wow,
EPS.
that is nice. That's nice earnings per share beat.
From what analysts were expecting. Now, U.S. Steel is going to hold a conference call tomorrow at 8:30 a.m. Eastern time. That's when analysts are going to be looking for any commentary
about
on
tariffs.
Remember,
right.
When it comes to the steel,
that's why I shorted it.
25% tariff on imported steel is supposed to help the domestic companies so that it levels the playing field and they could do more business here at home. When we sat down with U.S. Steel in Granite City, that's what the company told us they expected.
Oh man, I'm gonna be rolling in it tomorrow. Trip going. Oh man, all those puts I bought I bought a good amount of trip puts. Wow. Yes. WYNN knew that it was going to pull back. They already knew that their guidance was going to be weak. Everybody knew WYNN was going to be weak because of MGM and Caesar today. The CEO of Caesar literally leaked the news that all of Las Vegas was going to have weak turnout in terms of events going into Q3 because of the fact that they was doing a lot of, I guess, restructuring a lot of weakness in terms of consumerism in that area for event shows based like that. So I guess they didn't factor that value into the numbers. So they pretty much leaked. He said all of Las Vegas is going to have weak numbers for events.
U.S. Trade Representative Ambassador Robert Lighthizer to study a higher tariff level on that tranche of $200 billion in Chinese imports that was currently.
There you go. There go Trump, and then Trump firing off right now talking about he's looking at up the end on the Trump's tariffs on China, Chinese goods. Right when U.S. Steel and some of these other companies are trying to steer clear of any kind of tariff talk, and here he goes ratcheting it up on these people's earnings. That's why you can't. Trump will, man. Trump is one funny dude. That's all I'm gonna say. That is one funny dude.
These officials said that there were no current talks planned with China, that the president remains open
this is crazy.
With his counterpart, President Xi.
So excited though, made a ton of Caesar today. Now turning around and shorting WYNN Resorts. And forgive me guys, I can't see you guys chat, typing in the back yet. I got to open up my phone here because I got the share screen going. And my other laptop over here, I have, watching some stocks, whatever, and TOS. I didn't do the split screen, whatever, basically what I'm saying. I guess I was rushing. Come on, don't do it. Don't do it, Square. Stay below 66. Don't do it, Square. Stay below 66. Don't do it, Square. I need Tesla to come back down to at least 305. At least 305, I'll be comfortable. Don't you do it, Square.
Possibly raising that tariff.
Sometimes you got to talk to your trades, right? Again, I'm just excited to be back in.
We need a tariff calendar to keep it all straight.
Right, because you don't know what's going to come day over day with these tariffs. I do know one thing though, it's hurting a lot of companies that depend on steel and aluminum-based thing, and also some of the commodities on the agricultural side of the house. Soybean, corn, stuff like that. I don't eat that stuff anyway, but it hurts a lot of these, U.S.-based businesses, and based some of the farmers that shipping a lot of that stuff over to Asia. Asia being one of the biggest, consumers of soy, definitely, and a lot of that soy that they're getting also is coming from U.S. farmers. So you hitting those farmers with those, soy tariffs, or I mean, that's really huge. I think they also grow soy down in South America. I think Brazil somewhere down there as well. They're also another exporter of soy.
Or $16 billion in exports, or $200 billion in exports, and so they are actually removing some products.
Come on, Square, don't start that foolishness.
That they are getting, but the question remains:
don't start Square. Again, great day in the market. I know everybody made a ton of money from being in and out of a lot of the Discord rooms today, and Twitter and all the other places. I see a lot of people made some really big money today. I definitely want to give a shout out to my brother Bully Bear. Man, just watch this guy blossom over the past year. I mean, he's just been crushing it lately. Right? I mean, just really crushing it. Always had a strong mind, about how he valued the market and valued life as a whole. And he's being rewarded for a lot of his hard work and due diligence, and I just can't say enough about that. I love to see people have success in this market, especially watching, where we all came from and the level of growth that has undertaken us. And literally, on a short period of time, and now, people get to the bag the way it was designed to. Hard work, paying off. I mean, I think he had what, $7,000 a day, $8,000 a day, something like that today. My brother Bully Bear, $8,000 in a day, guys. Let that marinate. I mean, how many of you guys can use about $8,000 and just pushing buttons? I think he was done, right about 2 or 3 o'clock, even probably before that, he was done for the day. $8,000 up, $8,000 on the day. I mean, come on, guys. This is why people go hard. This is why people take it serious. That's why, we have fun, but, you have to take a level of seriousness and due diligence into this thing, because any given day, again, these could be the numbers that you can acquire. And that comes from, again, doing your homework, studying, realizing, this market is an ever-changing process every day. It's a variable value nature process every day. It's speculative for a reason. And you have to be on top of your game. And I know we have lives outside of this, and it becomes hectic when you're trying to multitask and compartmentalize time and family, and especially you guys got children. It's tough. But again, would you rather put yourself in the driver's seat to make this, make these kind of opportunities or gains that's potential for you, or rather be on somebody, job, making their, their dreams come true, pushing the clock, making, minimum amount of money, stressed out, away from your family and friends in life, for peanuts on a dollar? Would you rather do that or being able to trade the market, and put yourself again in this situation where you can make, $8 grand in a day, and most people don't make that in 2 months. Some people 3 months, and you can make that in 1 day. Let that marinate. Let that marinate, and then go make sure you exercise your right to be the best you can be at this. And forget the naysayers, forget your critics, forget everybody out there talking, sideways. You go do what's necessary for you to be successful. And you surround yourself around great people that are hardworking too, that bring, skin to the game, so to speak. As I always say, it's a wonderful think tank. And you have to make sure that, again, your team or the people around you share that same vision, passion, and discipline. Right? It's all fun and games, when it's time for that. But when it's time to get the bag, we need everybody to be focused because it matters. It matters. So again, and that's just one shout out. Also want to give a shout out to my Oba Gordon, my brother Gordon Gecko. Again, part of our little training workshop that we have. Again, watching this guy blossom the same way, like Bully Bear and many others, very hungry, very humble, took this thing, very serious. And now he's getting to the games. I think today he had a $200, $300 a day. The guy just started really trading intraday, at this magnitude or level, just recently after, coming through a lot of the training that we've been going through lately in my little, investment training thing that we have. Again, we still got more to do. We ain't done just because I took my little hiatus of buying this house, but we're going to get back cracking. We got a lot of special guests still to bring on. We had the Forex, guru come in. Our sister, Dr. Moore, right? We're definitely going to bring her back on. She got a new book coming out. This woman is a published author, right? She mentors and trains millionaires, and she's a Forex trader, among many other things she do. But this woman is phenomenal, right? She took time out of her busy schedule to come on and build with the family on one of our training sessions, and we got many more. We got obviously option traders coming on. We got obviously crypto gurus coming on, blockchain and regular Bitcoin enthusiasts. Again, then regular common stock people. We're gonna keep building this opportunity. We're gonna keep building this house, right? Like the Under Armour commercial, right? Will you protect this house or build it or whatever? Y'all know what I'm talking about. But regardless of that, I can't say how it, man, just how humbled I am to be around you guys. All you guys, even some of you guys are not in our Discord room, and again, we got the Eva Camille in the house that's been tearing it up. She rebounded, had a little moment where she was tearing it up. Then she went back to the drawing board, got her mind right, came back stronger. Now she back getting to the bag. Again, over Chris, the whole family, over David, over Caesar. Again, everybody, over Al, Eva Monica, over Garfield. We can go down the list. Over Sin Sean. Man, this is beautiful. Eva Kiana tearing it up in the Forex market. She's been on a tear lately on the Forex market. This is the stuff I be talking about, And again, I can never say, man, how just excited I am just to be, in the atmosphere of you guys. And just simple as that. Just simple as that. And again, that's just what we live for. We live for these moments. We understand the velocity behind our opportunities, and that this thing could thrust us into some very, very lucrative opportunities in life because we're using this discipline properly. We're using the intellectual prowess of each other properly, and we're strategizing and building every day to get better. We're waking up hungry. We're not waking up complacent. We're not waking up with the illusion of grandeur in our head. We stand within our comfort zone in our lane, basically, and we're trading what the market offers us day in and day out, right? And that's the best thing about it, because you're doing it again with a level of focus and intent. You're not just sloppy making trades and just doing stuff just because. We always have that moment every now and then. Again, we still trying to battle emotions. No, there's no still-minded trader out there. Even Warren Buffett get flustered. Everybody has emotions, and you're dealing with large sums of money. You're dealing with opportunity. Everybody has the occasional case of FOMO, and it happens, and that's fine. right? But again, you need to learn how to mitigate that. The same way we talk about mitigating your risk, right? Compartmentalizing that, right? Understanding the power of good risk management, sticking to it. You know, again, shout out to my brother Stockgard, right? In the trading community, right? Built that Discord room up like none other, right? One of the most popular Discords out there to date, and it just got really started, and it's only gonna get bigger. Again, them guys in there, like, man, like lions. You know, I know that like people like to use the wolves scenario in terms of trading wolves this and wolves that, but you know, hey, that's the African in me. I'm gonna speak lions, right? I know lion trumps wolves any day, right? I'm born in America, by the way of Africa, but at the end of the day, man, voracious bases, eaters, and they're like, you know, hey, ready to take the market head off every single day. And they're in there benefiting off again each other's value and information and think tank to the point where everybody's in there dang they're profitable. I mean, literally day after day, everybody's in there is pretty much profitable, right? And that's what I love about it, because again, trusting the process, understanding what it takes to be successful, and then going after the market to kind of make it happen. So again, these are the moments, man. I tell you, man, we worked hard for it. We study hard for it. We see the opportunity in it. We know that it's going to fuel our futures. We know that it's going to help us, be able to do the things we want, take care of our goals and dreams, buy the homes we want, buy the cars we want, make other sound investments in our life. Are we doing this with the proper perspective? We're not, trivial spending. We understand the value of holding, reserving capital now, because we need it to be able to trade. So the investments that we're going to make going to obviously be appreciating type investments. They're going to appreciate, right? Compounding interest-based type investments, not none of this stupid stuff we used to do. We just go out and buy 30 pairs of shoes and cars with real stuff that depreciates as soon as you pay for it. And that's what happens when you become more financial literate. You get very, very tight with your dollars. You realize the power of your dollars now. So again, I'm just excited, man. Again, as I always keep saying, to be in the midst of you guys and know that, the sky is not the limit. That the sky is just the beginning in terms of what we do. The sky is just the beginning. So get excited, guys. Continually try to better yourself. Better the people around you. Be an asset. Don't be a hindrance or a burden. Right? Save the drama for some other day. Realize that all eyes and ears on deck every day matters. Right? It matters. Right? And we're going to keep destroying this market. Yeah. So again, power and profit to the family. Uncle Johnson there. Thank you for stopping by. I see my family Deep Patel in the house. Thank you for stopping by, family. I see my family Alabama Consciousness in the house. Thank you, family. I see my family Fisher G in the house. Thank you, family. I see Over Chris in the house. Thank you, family. Eva Camille in the house. Thank you, Eva, as always. I see my family Abraham Jonas in the house. Thank you, family. Right? I see my family Onion Head in the house. Thank you, family. Yeah, every time I call you now, we're gonna keep thinking about Whirlpool. I'll be crush Whirlpool. Thank you, family, for stopping by. All right, and everybody else that's probably hanging out too. Whether you typing something in the back chat or you're not, I thank you for stopping by again. Y'all know how I am. I'm just thankful and grateful. Anytime you guys take time out your day or your schedule to kind of hang out with your brother for a little while, even if it's for a couple minutes or a second, that's fine. Again, we know how trade the market is. It's very it can be stressful at times, very tedious process, and a lot of focus and intent. And it's hard trying to watch all this stuff while you trade at the same time, like live streams and other stuff, and listen to the news and watch the charts. It's a lot. But one thing I love about this, though, again, it strengthens your ability to multitask like none other. Think about that. You have to learn how to multitask like none other when you become, invested in the market and learning how to trade, because especially day trading, because again, you have to be focused. You have to. You watching literally every tick. You watching every move. That a lot of these assets are making. Tick for tick, and it matters. One tick could be equivalency to $10 to $20. Especially if you got big shares. I've taken stocks like that, big shares, and for every 1 cent, that was like 20, 10, 20, $30. That's a lot. If it drops 3 or 4, 6, 7, if you're short, obviously 10 cents, 10 cents on a $30 drop, $30 per tick drop. I mean, woo. So it, again, requires a lot of intent. Again, the attention to detail, basically, and focus. So, again, it's just opportunity, man. We are doing something that most people would never think to do, and because of that, we are, unique in our own way. And a lot of our peers and family members will never understand. It's our goal to help bring them up to fruition where we are at some point. Maybe the light bulb goes off. The more you keep coming around, they keep seeing you making power moves, maybe the light bulb goes off. And then they'll start asking questions. Hold up, here's another earnings. Oh, Yum China, yep, Yum.
Pizza Hut, mainland China. Same-store sales growth really came in a lot lighter than analysts were expecting at both chains during
I started to trade Yum too, but I was like, no, it's not worth it.
On the top line, but he got a 3-cent beat on the bottom line. Overall comps down about 1% compared with street estimates that they would be 2.5% higher. KFC comps were flat, while Pizza Hut was down by about 4%. EPS,
yeah, Domino's Pizza ruled that roof.
36 cents a share versus 33
Pizza Hut used to be like one of the most premier pizza restaurant chains, and Domino went to the drawing board, revamped their business, got their sauce together and everything else, and came back and started crushing it. Especially at Papa John's, since they didn't fell off. But their pizza was always nasty. And when I even ate that trash, it was nasty. Papa John's, but whatever.
Sexual misconduct service about its CEO, Leslie Moonves. CBS reports earnings after the bell tomorrow.
That's another stock to watch tomorrow, guys. CBS. Obviously, they got the whole issue with the CEO and this sexual harassment stuff that's been tearing a lot of these CEOs up lately. We know that stuff been happening for a long time, though. These old, fresh, perverted, managed behind CEOs, using their power to prey on women and young interns and making them feel uncomfortable, looking at them all kind of ways, stopping them from being promoted in business because they don't want to, do favors for the CEO. Man, these some dirt bags, man. These some straight up dirt bag, perverted, excuse my language, bastards. And they preying on women's need to be able to be successful, and making them feel uncomfortable. A lot of these women got husbands and stuff like that at home. And a lot of them are probably afraid to even go and tell their husband because they're afraid that, they get fired, then how are they going to pay the bills? The kind of stuff that a lot of our, sisters got to deal with on jobs with these old, perverted bastard behind CEOs. And y'all got to realize that that's why it's important, man. You got movements out there like Me Too movement, all that. I don't agree with a lot of that stuff, obviously, because a lot of their tactics are very, very, one-sided and not, balanced. The feminist movement. But again, a lot of these women are sick and tired. Some are legit complaints. Some are legitimate complaints. And it's all because this old bro culture, this old patriarchal mindset that came from Rome. Let's keep it 100. It's a Roman, patriarchal, Greco-Roman mindset that makes women be, less than a second-class citizen. That's how they was. I just go back and read history. If you got a problem there, go read history. Pick up a history book. Don't give me feelings. Go learn how to become educated about reality and history. But you will realize they brought that same culture right onto this old ratchet behind country. And because of that, they think they can just, treat women like trash, in any kind of way. And you having that now when women are pushing back and saying, not today, not on our watch. They built a coalition and now they're taking it to these companies, right? So you can't be all on the job flirting with somebody's wife thinking it's all cool just because, you got issues and can't control your hormones. But to get your mind right before you lose your paycheck. That's all I'm going to say. Get your mind right before you lose your paycheck. So, again, we just got to realize, as men, we got to be better, right? We got to do better. We got to be better at protecting, and we got to be better at being tolerable to understand that, we need to pretty much get ourselves in check. So you don't be out there harassing nobody, wife or whatever. But again, these companies are getting slammed. These CEOs are getting hit left and right. Harvey Weinstein. The list is endless. Hold up, we got some news on Apple.
Share price bogey to hit that $1 trillion in market cap. The company just revealed an adjusted share count due to those big buybacks. So the $1 trillion per share price, Wolf, is now 207.05. Obviously, we're not too far from that. And after hours trading, after that earnings report, we're now at around 201.70. Wolf, back to you.
Josh, thanks very much for that. After the 10Q came out doing the
all right, so they just filed their 10Q, guys. They missed the $1 trillion market cap by 85 million shares, guys. How close was that? And if you look at the volume that Apple traded today, phenomenal amount of shares that were traded. Obviously, those numbers are not really baked into what the numbers came in before they filed it. You know, they 10Q form, whatever. But again, 85 million shares short of hitting the $1 trillion mark, guys. Imagine that. That is phenomenal. That is phenomenal.
Tomorrow.
Again, still on their. I mean, they still on their way though. They still going to hit it. You know, they still going to hit it.
Well, I think that, you know, if he talks on the call, which
hold on, guys. Let me see what they're talking about.
what he's typically done. You know,
Hey, what's going on, felon D Messer? Oh yeah. You breaking up the numbers for Tesla. I see your numbers there. I see it. Yeah, they got to lower that price. Those Model 3s are highly overpriced, and on top of that, you know, being able to hit those production goals that they kept, you know, having to rearrange and change because of stupid stuff, close the plant for this, having to deal with this. I mean, it's one thing. I have no doubt in my mind at some point it'll balance out and they'll start becoming a company that can possibly be what they are designed to do. But with this, you know, with this guy being a scatterbrain, he's like trying to do like a million things at once instead of focus on doing what he came into the game doing and obviously building those cars. You know, that has hurt the company, and it has delayed them from being a profitable company up to this point. And everything that they're getting now is based upon, you know, projections and, you know, things of that nature. No really tangible hard, you know, book value. But again, leave it to the market and the cult followers of Tesla. You know, that's how, you know, the stock is still being able to kind of just go up on the aspect that it's not even really putting no money in the bank. This is all valuation. It's completely valuation. You know, it's crushing me out the hours, but I guarantee I made more on Tesla this week up to this day than what I'm down now. I guarantee you that. Y'all, well, whatever. But again, you know, that's you know, it's just weird watching Tesla being able to do these kind of, you know, hat tricks, you know, quarter over quarter. I mean, this is what you call prestidigitation. This is prestidigitation all day, every day. Sleight of hands. Elon Musk is good at that than nobody else. He's a Twitter warrior. He's the biggest troll besides Donald Trump. He knows how to get investors flustered, short sellers flustered, long investors flustered. I mean, he's playing his position, and maybe that just be how he is. He just like that. Whatever. It's his company.
Shares are currently lower.
Hold up.
It was a big disappointment. We're going to get some of the highlights next. Stock is down almost 8%.
What they're talking about, WYNN. Yeah, I shorted the brakes off WYNN. Thank you. I didn't even really go big share side, but it's worth it. I bought 75 shares short. It's worth it. It's paying off. Yeah, but Tesla here squeezing up even higher here, guys, after hours, just tearing it up to the upside. I mean, I already picked up roughly over what, about 300 skins, about 17, 18 bucks after hours, somewhere around there. I mean, big move. You got, hey, you know, big move. And again, because you have a bigger following, a big cult following, that determines your following long enough to drive the stock, regardless of everybody else that come in is planning for the position of the price action. And that's what's amazing, because you can build a type of following that's look at it this way, right? You know, and there's nothing wrong with that. Again, let's keep it 100. We all understand the power of capitalism and the value of, you know, having the type of content that followers want to kind of peruse, you know, in a lot of ways, be it tangible or intangible. And in this case, obviously offering a product, but he's also offering a part of a mission value that is revolutionary. Again, electrical cars. We know the world needs it. You know, pollution is all-time high. It's killing the ozone layer. You know, the UV rays are getting stronger and stronger every year because of the things that most people don't want to deal with in terms of global warming. They see it as a hoax, but reality is real. You can't keep damaging, you know, Mother Nature with all this pollutant trash that you didn't have thousands of years ago and expect, you know, is nothing going to happen because of that. So again, revolutionary product in the car, you know, and you know, and these, you know, electrical plants that he's trying to build, obviously following up on Nikola Tesla's real, you know, vision and mission. Obviously him just kind of picking a torch up and doing a pseudo version of it, right? All right, taking credit for a little bit, nothing wrong with that. Again, further than man said it, but give him credit. That's why the government killed Nikola Tesla, because again, he was getting ready to drop that free power for everybody globally, right? That lets you know you're dealing with a ratchet behind global regime of tyrants and thugs and and real bastards. How you kill nature's evolution. Nature brought that man here, Nikola Tesla, to help improve nature. Nature, us being part of nature. The guy was going to give the world free electrical power. Free electrical power, and they killed the guy. They killed the guy. Like, who would do that? But a dirty, low-down, nasty buzzard. And we know who these people are. The Bilderberg, right? The 300, right? And there's many more. We can go down the list. All these, the lodges, y'all know what I'm saying without me having to go deep. But these are people that control a lot of the, that got, again, well over half of the world in starvation and poverty. Greedy bastards, just greedy bastards got you believing that it's okay for the person to starve just because they ain't pull themselves up by their bootstraps in a debt-ridden society where the only way you can be successful is take on debt. Like, who does that? But again, let me get off my soapbox and get back to these stocks because I'll be here all day going in. But again, that's the game. You say Tesla going to fly to 370 again? Who knows? But I say this here. I will say this here. Again, the stock dropped from what? 350 down to 330, 330 down to the 320, from 320 down to 310s, and then it got down under that 280, right? 290 point. Right? Some big levels of support, resistance going back up the same way it was for it to come back down, that it blew through a lot of those a lot faster. Because people realize at the end of the day, Tesla is not the type of asset that's warranted really the value that a lot of the institutional investors are saying day in and day out, that they know that this stock is only, one bad report away from really tanking and going under 280, getting down to 250s. So again, it's finding ways to stay relevant. It's finding a way to stay relevant on a lot of missed expectations, moment in and moment out, because of the fact that, again, he's trying to do too much as opposed to focusing on what he really needs to be focusing on. And because of that, again, it's a short seller's nightmare and a short seller's dream all in one. You just got to make sure you be on the right side of the trade every single time, because if not, it can burn you. Again, I look at this evening. A lot of people had Tesla in the dumps, right? We just knew those numbers going to come in. We knew the cash burn was going to be through the roof, like it always is. It's constantly burning cash, hemorrhaging cash. Like, no, who reminds me of in terms of the cash burn level? HMNY, the company moving past Helios and Matthews, right? We know that company is literally headed for the grave, literally, like I was telling people. And they did that old bogus behind, reverse split to try to save itself from being delisted. Was above what, $22, something like that, when it opened up, $20-something, and they shorted that thing down to ashes. Now it's trading at 26 cents, guy. It did a reverse split last week. If I'm not mistaken, the reverse split happened, what, Friday or Thursday last week, or Monday, one of these days. I have to go back and look. And right now, that stock was trading at $27 after the reverse split. Now it's trading at 26 cents. Let that marinate. Toxic company, toxic management, raggedy behind, ratchet behind people at the helms of great opportunity-based companies. And because of that, they ruining shareholders' opportunities to be successful and investing in them. Right? They talk. That's WYNN CEO talking. Well, the interim CEO, since
creating incremental competition for VIP.
2 points here. He says that revenues are bouncing back in July.
Guidance is definitely going to be weak. We knew that. The Caesar CEO blew that whistle. Exactly.
Looking at events really causing problems in Las Vegas.
See, this is why due diligence is important. I heard that call when the Caesar CEO was talking about that on CNBC, that all of Las Vegas was going to have weak guidance because the events were going to come in light for Q3. That's why I took my short. On top of looking at the books, and we know WYNN was still trying to restructure itself because of everything that happened with, the whole fight between, the WYNN estate, the wife and the hubby, them trying to get a brand, beyond that of the CEO after his sexual allegation, and it's still trying to get his feet underneath it, right? And Las Vegas has obviously been under the scene of the crime, literally, with all this stupidness been happening down there, people getting shot up in that. Again, Las Vegas ain't like it used to be. You know, it has taken a brand hit. Let's keep it 100. It has taken a brand hit. You know, but again, these are just many other ways. You know, so yeah, it's HNNY. They have the dirtbag CEO. Yeah, HNM. Are you talking about H? Are you saying HMAY? I think you might have been saying HMNY. I think on your head. I could be wrong, but yeah, the CEO of HNNY is dirt. They dirtbags, man. I think his name is Mitch Lowe, something like that. Yeah, he garbage, man. He just ruining shareholders' opportunity. Man, I know people have put big money in those trades too. You know. But you know that, hey, again, that's why you never invest more than you have willing to lose. And you got to have an understanding of what you're investing in when you invest in it, to the best of your ability, and let the chips fall as they may, so to speak.
Gene Munster is getting ready to jump on the earnings call. Starts in about 30 minutes.
Yeah, I mean, again, it's crazy, guys. It's crazy. Hey, what's going on, family? JR Turn, I see you, family. Hey, no problem. Hey, you can shoot me an email or hit me on any of the social media that we kind of follow each other on. JR Turn. I'll get you some information, family. I'll get you some information.
Yeah, it was a loss of 306, and the expectation was a loss of 292 per share. That's not what's moving this stock. What's moving the stock is the fact that the cash position, they ended the quarter a little better than many people expected. $2.2 billion in cash on hand. The cash flow, about $739 million. That's better than many were expecting. I saw some estimates of saying, look, we could see them going through $1.2 billion in the quarter. They're still projecting to be profitable in the third quarter and the fourth quarter. And when
that remains to be seen.
Model 3 production, in terms of where they were in July, could they sustain at 5,000 per week? The company said that they did.
Come on back down, X. I knew you was gonna come down United Steel. And they gotta wait, do the conference call tomorrow, which is gonna hurt investors, momentum after hours. Because they don't have a CEO to come in to kind of help bring the numbers to unpack those numbers.
Model 3s per week by the end of August. And finally,
so there we go. They upped the numbers to 6,000 Model 3s by the end of August. First it was 2,000, then it went to 5,000. Now they upped this to 6,000. They barely can get the 2,000 done to get to the 5,000. Again, just a lot of okay. We'll see.
We can simply make the lines that we have now much more efficient. Therefore,
we'll see. Again, I like the technology. Don't get it twisted. I like the technology, but the CEO is just do ratchets.
We will check back in with you a little
but big beat for them in terms of beating the analyst expectations. And these are not beats because you did put in a lot of hard work. These are beats because you barely got above the expectations of what they thought you was already going to lose. So it's not necessarily a beat. It's a beat because you beat from being worse than what they thought you was going to be. Basically. Don't get it twisted. Just because they use the word beat don't mean they're profitable and they doing good and no. This is mean they did better than what the worst expectation that was given levied upon them.
So in essence, you can actually be both right. Here it is now. What's the point? Cash burn wasn't as bad. Phil just said
right. You see, you got to make those kind of predictions. It wasn't as bad as the bloodshed. It wasn't as bad as we thought it was going to be. Nevertheless, it's a beat, though. Nevertheless, it is a beat for them.
It's probably poised to take out the all-time high.
All right, Grasso, you went long. You were long into the print.
So I was long into the print. I got long around the 280 level originally when it.
Right. See, 280, a big pivot point, like I just called. 280 was a big level of support pivot, and we knew trading in around that area, especially if they missed the earnings, was going to blow through that level of support. 280 go lower around 250. Again, they cooked the books enough to kind of get above that, and because of that, they back above what 310. They in that range between what 320 and 310 now. Again, it's trading in like a $10 and $15 swings. If you trade Tesla, guys know what I'm talking about. I traded it so much I know how it trades. Again, I covered off the rest of my short today from a 309 all the way down in the 296, 295, 295, right? Added more to it around 302 for earnings. And again, now, I'm down a little bit, but I made, again, a ton more on the backside than I am down on the earnings. I knew I was going to take a short in the earnings. I knew that, no doubt. I just, whatever. I knew I was going to take a short. I'm not going to sit here and play the game. I knew I was going to take a short in the earnings because them numbers had to prove me right, or wrong, so to speak.
I think the product is fantastic, but I don't get the valuation.
Me either. Everybody says that.
It is obviously a full stock. I know.
It's a cold stock. Exactly. Exactly. It's a cold stock.
That was important.
Right. I know you're in the stock, and it's been such a momentum play. But do you get the valuation? You don't think? I don't get it. No, I don't think about it. Nor do I think about the valuation.
Right. Yeah, I know why you don't, because you know it's a crappy company. The valuation does not warrant its price. The numbers don't lie when you do the math. What's saving it is its cult following and the opportunity that if it ever becomes profitable, it's going to be a powerhouse of revolutionary value, because those cars can really, become a big staple.
He wants to be a car company. I don't want to slap on a car valuation onto a Tesla. So I have a problem with this. This for me is about when does he get the little Momo back? And I think he's actually trying to be something that I don't want him to be. I want him to be the growth guy. I want him to be the Momo guy. I don't want him when you see when he's going to be profitable, when you see that headline come across. There was a time when he used to say, I can be profitable, and never even say what quarter. Right. And no one cared. Now he has to slap a quarter on it. So he's definitely running out of time on this.
Right. It is getting downtown. Yeah, it's getting to the crunch. And I agree with that. This Q3 and Q4 are going to be make it or break it for Tesla. I guarantee it. Pretty much this is the year for Tesla to shut up or put up.
They probably are.
Or put up or shut up or whatever.
Like you say, everybody is forward looking still, right? They're giving him the opportunity.
Right, giving him a little time, or giving him enough rope to hang yourself. No pun intended. Dirty word, dirty scenario based upon history, but giving him enough time to kind of let his knowns be known.
Already had some job cuts there. I think they cut back 9% not that long ago. So there's a lot going on in terms of what was several months ago, this cash burn problem that they have, and how much money that they've got right now. Phil talked about $2.2 billion, right? 800 million in revenue coming in. So,
oh yeah, hey, sorry, family. JL Turn, you can email me directly. You can email me directly. My email is just tied to my business name. Anytime you see African Porn, just put Gmail behind it. Same way you see my YouTube channel, that's my business email too. Right, and same way you can find me on Facebook. Same way African Porn, that's my office, my handle. And before Stock Twist, suspended me for nothing. Right, you can find me on Stock Twist the same way with Twitter, African Emporium. Spelled with without the U on Twitter because of the letter scenario.
I don't think he's going to slip up the way he slipped up on that call. I don't think.
Did he slip up?
I don't. Well,
here comes Square. Here comes Square. Here comes Square.
It was fine. The other comments that he made in an unrelated incident, that's not fine. But on the call, I kind of want my CEO to stand up to an analyst and tell him, get back in your place. I got this covered.
What? Are you serious?
Yeah.
You have public securities out there, and they ask
right. That's stupid. All right. I mean, literally ludicrous. You don't want no, because you got investors and in your company. They don't want to hear all that. Somebody want to hear you ranting and raving. Like, man, conduct a professional business and realize that my money is in your company. He's stupid for saying that. He just said it because he took it long in the earnings and you up. That's him pumping his chest.
Yeah, you know what? That was Tony Sacconaghi, who's a very
silliness, man. Silliness.
I like Tony.
That's fine if he doesn't want to answer. If he wants to have a CFO on the call and do that, that's fine. But for him to be on the call and to just dismiss really, meaningful, important questions.
I will point out.
I don't know why. Why is he?
It's a different world than Elon Musk right now, quite frankly, if you go back 15 or 20 years. But I'll tell you what, Steve Jobs wasn't the most friendly guy in the world oftentimes when he was confronted by folks. Now, it was different how he did it.
Here comes Square spiking up. Don't you start, Square. Don't you start, Square. Again, good numbers, top and bottom, man. Not gonna lie. But that guidance, man. But maybe people saying, you know what, we'll deal with the guidance being low. We'll ride it up and then pull back, let it pull back later.
He himself doesn't want to have
sell the stock. Sell the stock.
All right, okay. We can discuss later.
Right.
All right. For more on Tesla, let's bring in Gene Munster, who recently wrote a critical note of Musk.
Again, that's what's happening when your trade went your way and you get excited. You start feeling yourself.
Beyond the fundamentals of Tesla, beyond the numbers, it is more these days about Musk himself.
It is, and as it should be. I think investors going into this call in it are kind of shivering to see which Musk shows up. Odds are that he's going to pull it together. But my
Square spiking up.
This is what happened last quarter. And
they digesting those numbers over there, Square, and it's spiking up.
I love you, but I think that just crossed progress from that point. The part that gets missed in this whole question about Elon Musk and how he behaves is this company is very different than a typical company. Elon Musk uses a referral network, his personality, to drive sales. You don't see commercials for Tesla, for example. And separately is he has to win over investors in order to keep funding the story. And I think there's an important sub point to tonight's results when they talk about financing that debt for the Chinese, for this Shanghai factory. That is a sign that he still has confidence. But I think this is a really important topic, and we are going to be acutely listening to his behavior on the call tonight.
Hey, Gene, I got a quick question for you, just to go back a little bit with you on that. You say he has to win over investors. I think he's. I
see my buddy Warrior Trader Ross Cameron had a big loss today. He lost 4.5. That's never good. He had a tough day.
I'm not saying what he did was absolutely right.
Yeah,
I don't think
it's the market,
I
bro.
don't believe that. But it seems to me like he is a guy who's talking to the folks that want to buy their stock and want to own that stock.
Right, it's a cult following. Simple as that.
Very well, because
it's a cult following.
Look at the metrics over the last multiple years. The metrics.
What are you doing, WYNN? Come down, WYNN.
Matter of fact, they've gotten worse, and yet these guys
continue
to be wrong. Many of them that haven't analyzed this stock the way that a lot of us have. You particularly, because you've talked about this being a tech stock first that actually builds into the hardware side of it being the car.
So happy I took Fitbit too. A lot of people, wrote Fitbit off. They're like, man, Fitbit gonna crash and burn. Ain't nobody buying no watch. But if you realize, if you were listening in on the conference call for Apple, per se, also Garmin, whatever their little navigation system, whatever. But anyway, a lot of their wearables were highly comped this past quarter. They did really good on their wearables, basically. Wristwear based, GPS systems, telecommunications, which also has a form of, weight sensory, checking your vitals. Some of them do that, obviously. The Apple obviously have them set up to do that, which is the big market that, fitness based, wearables basically. And Garmin did really good on theirs. Apple crushed it with theirs. So again, that translated into Fitbit, obviously still being one of the more leading direct markets that, markets in that lane, so to speak, as a proprietor company of fitness-based watches. Again, they had a bad quarter previously, meaning they were trying to restructure some stuff too, especially after I think the end of last year, after the Christmas holiday. And they, they had a good one, then they fell off a little bit, then they restructured. So again, just happy to see Fitbit still, holding above, holding their own a little bit in a market now where it's becoming saturated with companies that want to get into that wearable space, fitness-based watches, telecommunications, and so whatever the case. But again, kudos to Fitbit. So I took those, that into earnings long. I bought the 650 calls, right around like $5.80. A really good price. I bought it literally at the low of the day almost. So I timed it just perfectly, and I bought those calls into earnings. Several of them too. I bought a good little amount of them too because they were pretty dirt cheap. So I bought a lot of them, and that stock is up after hours on the earnings beat as of now. Could be different later. But y'all know how this stuff go. You be up and you come back later, go to the bathroom or something, stock down, 60, 70 cents. Like, man, what happened? Like somebody done pulled the plug out of the tub. So again, that's the game. But again, great evening here, guys. Great afternoon. I thank you guys for stopping by. Again, hanging out with your brother. Just happy to be back in my little commanding seat, so to speak. The commander's chair, whatever you want to call it. Just being back amongst friends and family, man. You guys are awesome. As I always say, man, nothing like, great people. And it's only going to continue to get better. And as soon as I get stable, I can really, get some good, daytime value, trading in with you guys live, so to speak. So we can go over charts in real time, get some option plays together, do some really regular comment stock plays together. Trading the momentum. We can capture it live and help each other out. Because I know some of you guys not all in the same Discord rooms. I mean, I'm literally in about 15 different Discord rooms. I mean, so many I had to actually delete a few of them because it was just not necessarily really working in them. But again, I'm just type of person. I want to be around information. I know information matters in this business, in this field, and the more you're in the know, the better you'll grow faster in investing and trading. You have to stay in the know at all times. You have to stay searching for information at all times. You have to be, perusing the FDA calendar and the PDF UAs and all this stuff, the bioforms, all this stuff matters. You got to stay on top of the game. Watching what the oil market do, watching, so it's good. It's good being around people again that also value that level of intent to information, because with that, that's what's going to help you get to the bag. Being ahead of the game, so to speak. 1 or 2 steps ahead of the game, right? And then when it pops off, you already in the money. And it's starting to spiking up. All these stocks is coming back out, going back up. Look at Dirty stinking behind WYNN right now. I'm still up, $300. I was up 1,000. Now I'm only up 300, but I'll take it.
Blames the World Cup, which attracted gamblers away from the casino, and he pointed fingers at his competitors who re-entered the VIP business, though he did not mention them by name.
Look at the stock spiking back up after hours.
They outperformed in Macau in Q2. Still, Maddox says,
long as TripAdvisor stay down, I'm happy. I know they're going to short the brakes on TripAdvisor more tomorrow. And they were trying to put TripAdvisor back down into the 40s. Mark my word. Look for TripAdvisor tomorrow to be shorted down under 50. That's going to make my puts even more juicier. And I got a good little amount of them too. Bought those trip puts right on up. Yeah, Chinese stocks got beat up today. The ADR market got beat up because of the tariffs. IQ was the only one that bounced around. I shorted it into IQ. I made money into earnings. I shorted, covered, bought some to go into earning. It spiked up a little bit. It pulled back, right? I covered. Then I shorted it again up there near what, 30, 33, I think today. 33, and it pulled back all the way down to 31, somewhere around there. Made good money off that thing several times. Yeah, a lot of stocks like Huge was spiking up, Sogo was spiking up. Obviously, Baidu being a big winner, in that field structure, whatever. But the news came out about Google wanting to get into the Asian space and search engine space. That's what Baidu does. Again, anytime U.S.-based companies go challenge the Asian market in some values, it causes a lot of problems for the Asian market. Or the same way when Amazon says that they're going to branch out into another industry or sector of commerce, and companies that actually rule that roost, they start selling out. They get nervous. Like today, I think with Amazon saying they was going to go into, I forgot what, some space today, and the company Oracle got slammed by it. When they found out that Amazon was going to go into that space, it started selling off. Just the thought that Amazon is going to come into that lane, it makes stocks sell off because they know they can't compete with its cash flow, its ability to scale quickly and dominate within that sector, because its AI, algorithms values are so much more robust than a lot of these companies. They don't have enough money to compete. It's like big bank take little bank, and that's crazy. We saw that with the prescription service and the medical service when they were thinking about, Amazon thought about going into the online prescription service. CVS, Rite Aid, Walgreens start selling off. And that's crazy how this stuff works, but that's the game. And that's what's crazy because they remember they outlawed monopolizing companies a while back because they didn't want one man or one company having so much power and really destroying a lot of the smaller businesses out there. And now you're getting that all over again. These people found ways to grease the pockets of these senators, and so to speak. Again, I ain't got nothing wrong, nothing to do with people having a great business and good commerce. That's the game. But it's crushing a lot of small businesses because they can't compete. And that's the game. That's the game. And Jeff Bezos, obviously the richest man on the planet now, eclipsing Warren Buffett, blew past Bill Gates. Who gonna compete with him now going into the future? With the rate that Amazon is still a growth stock. That's what's scary. Amazon is still a growth industry as a whole. That brand alone is still in a growth phase. It hasn't capped out. It hasn't hit its ceiling. It hasn't, emancipated its potentiality. It's still a growth stock. Let that marinate. We literally was trading Amazon last year, guys, around $700-800 a share. True story. Having conversations about it, saying who's gonna be the first one to hit to 1,000. Now Amazon is up near 2,000, and literally 1,000 is up 1,000 plus up in the $1,300 in less than 1 year, about a year. Let that marinate. I mean, if you bought that stock during the time we was trading it, and the guys in the auction, auction room during that time was in small cap millionaire room trading Amazon, and people like Mondo and Q-Tech and I think Cali Rob and Quick Turtle, all the guys, Money Green. Yeah, Amazon did this today, man. Yeah, he's gonna be the first to get 800. We were just in there having a conversation, literally, guys. That stock was trading at $700 or $800 a share. Now it's at $1,800 a share. I mean, crazy gains. Crazy opportunity. That's what you gotta, love about the stock market. Any given day, any given quarter, any given biannual position, any given annual position, you can find yourself, really benefiting off of it. Taking a sizable position and sitting on it, let it turn over, or taking a quarterly based position, sitting on it. Day trading, swing trading, however, options market. Getting after these gains, index fund trading. Just getting after the opportunity. That's what this is all about at the end of the day. As long as you're in the building, as opposed outside of the building, you win. I repeat, as long as you're inside the building, then outside the building, you're winning. Now, what you do when you're inside the building, that's on you. But once you're inside the doors, you are good to go. Because there's enough going on inside that building to throttle you into opportunity. So again, kudos to you guys that took a chance on yourself. Kudos to you that took a chance on financial revolution and evolution in your lives and for your future and your family, right? And because of that, you're going to be handsomely rewarded as long as you stay the course and trust the process and stay disciplined. Simple as that. Simple as that. So again, that's why we go hard. That's why we take this stuff serious. Right? That's why we have a no holds barred mentality. Right. So again, kudos to you guys. Yeah, no doubt. Apple's gonna hit a tree. I mean, they needed $203 a share to hit that $1 trillion mark. Again, market makers pushed up there to get everybody all riled up, and then they pulled back because the stock was already so extended off the earnings. It came from 190, 192, 190. It came actually came from 190 yesterday, all the way up to 201. That's a lot for Apple to move in one day. Y'all got to think about. Look how big. Matter of fact, I don't know when the last time y'all went and looked up Apple's float. Go look at what Apple's float is. If you go look up the float on Apple, you'll be like, good God. You would think it's an OTC type of stock. The float so huge, you would think it's an OTC traded stock. Y'all know the OTC stocks be trading like $1 billion plus float, lots of billions of shares because they're so tiny. Apple, yeah, go look at Apple float. It's huge. And it moves that much in one day. That's a lot of movement. That's a lot of upside movement. Short skin squeeze all. So the stock can only, have so much of a, extended stretch like that based upon its float value and, shares outstanding to that, the ratio of the short interest. Before it gets to a point where it start washing out, the stock, shares start washing out. So its market cap right now today, as of right now, at the last 10Q form that was filed the other day, is $973 billion. They have a moat of $973 billion. Short $27 billion from being a $1 trillion company. Let that marinate. Let that marinate. Based about $250 million from being a $1 trillion valuated company. That's crazy. That is crazy. But again, that's the game. That's the game. And it's trading at $200 a share. And Amazon and Google trade at near $1,800 a share, and they aren't as close to being that high valuation than Apple is. So it makes you wonder, like, how is Apple, you know, about $1 trillion company, and it's on trading at $200 a share, and Amazon, them not too far away from $1 trillion, but they're trading at $1,800 a share. Crazy how this stuff works, right? Right. On your head, you think you can whip that out of your pocket, bro? Whip that. You can handle that. You can pay, you can just write a check, you know, for that other 25 billion. They'll be all right. Put them over $1 trillion. Yeah, it's crazy, man. These numbers are crazy. The valuations are crazy. Yeah, and again, this whole project in Apple, when they released the iPhone 10, I remember like yesterday we was going over the numbers. It was like the Q3 report, and everybody was so anticipating this iPhone, you know, X and all this, and we was like, man, the valuation, right? And you know, is the market gonna be able to, you know, sustain $1,000 plus, you know, apparatus in a cell phone, and people will pay it? But again, when you got a cult following, which Apple has a cult following, just like Tesla, people found a way to pay $1,000 for that phone. And that was a big deciding factor for this past earnings, this Q2 earnings, was the number that people still went out and bought the iPhone 10 or the X, whatever, for $1,000. Somewhat 8 months, 7 months after the fact, they still went out and bought that phone up. You know, so it was a test pilot to see if people were willing to pay that much for a phone. Now that they know that their fans will, guess what's going to happen? They're going to up the ante and up the price even more at some point. Before you know it, the next iPhone will be like $1,100, $1,200, and they know that y'all gonna run out there and buy it. Notice I said y'all, right? I'm an Android user. Because again, a cult following always finds ways to up the ante on the income, find a way to save to get what they think is a revolutionary based product to say that they got it. Again, they plan on your ability to want to be in the know, in the now, and keep up with the Joneses. So you're gonna go and pay that amount because you want to be comfortable saying, I got the latest tech. You know, that kind of mentality. Again, fear of loss mentality. Understanding the variables of marketing. All right. I did marketing well over 15 plus years, international based marketing and local based marketing, direct marketing, not on this multi-level marketing mess. I did direct based marketing. Our clients were people like New York, we had the Mets, we had the Dodgers, we had the Boston Celtics, we had NASCAR products, we had executive hotels, WYNN Resort. We have those type of clients. None of this old, you know, I need to go sign up 8 people and then y'all go find 8 other people. No. So again, understanding the value in marketing and what we call the Fuji, fear, loss, you know, what was the other, greed, indifference, and what was the U? What was the U? Dang on you. The U was what was it? It'll come to me. I know the principle like back when I had done it so long. But either way, again, they plan on people's need to want to be obviously relevant at the end of the day. And you will pay that kind of money, literally $1,100-$1,200 on the phone. Now that you guys have become investors and traders, now you realize the power of what $1,200 can do for you in the market as opposed to putting it in the iPhone. You'll go invest it in the market properly to make the house money to go and pay for your iPhone now, because you're not going to go out there and shield that money out, not knowing you have a way to get it back. That's what I love about the market. That's what I love about the stock market. Your ability to trade effectively is going to pay for all your miscellaneous things that you want in life the way it's supposed to be done a long time ago anyway. You're going to pay for your car, buy your house, pay off your bills using the stock market properly now because you learn how to use the value of a good investment to get to the bag. When before you had to go work extra hard for Mr. Charlie, time and a half, overtime, all this 2 or 3 jobs, away from your family, friends, and everything, just to be able to kind of, you know, enjoy some civil little values of life, your opportunities in life. You know, so again, we're changing the game, guys. We are trendsetters. Just keep that in mind. You are a trendsetter if you trade in the market. Period. End of discussion. Hands down. Drops mic. You're a trendsetter. You're a pioneer. Again, go look at your peers. Go look at your family members. How many of them invested in the market? Probably not none. You're doing what most people are afraid to do, but they don't realize this is where all the money's at. Let that marinate. Let that marinate. This is why you guys are going to be successful. among other things. But again, this is one of the factors as well that's going to help you become successful in life. So power profit to you all. Kudos to you all. You extraordinary, phenomenal beings. You guys that take this serious, that go hard in the paint every day. Whether you trade every day or you don't, but you stay studying, you stay keeping your ear to the streets, right? Keeping an eye out, on the world on a daily basis, seeing what's happening from a global political perspective, seeing what's happening from a global commerce perspective, right? Because that matters. That's what moves the needles at the end of the day. That's what moves, dollars, daily. So get excited for being the type of people that don't waste their time, to waste their time, basically, on trivial things that not going to help you get to the bag. No one got time for that foolishness no more. Ain't nobody got time for that. Definitely not me. That's just me, but that's just how I get down, I guess. As Cat Williams said, that's where I get my hair done at. I don't have time for trivial things. I got too many goals I want to hit. I got too many things I want to do, and I want too many, people I feel like, I could benefit with and around, and also offer my feedback and help and assistance for, especially my people, because we need this, right? And we need this, and we know it's hidden for a reason. No one's beating down people's doors to teach them about how to be, find other ways, lucrative ways to become financially literate or comfortable, without trying to, usher you into some university, go into debt, or buy the overly expensive trading course at tens of thousands of dollars or whatever. If you can afford to do you, but at the end of the day, you need to be around serious people that's going to really devote time and attention to helping you become phenomenal at this, one way or the other, right? And a lot of that stuff can come right off the wheel, right off Google, et cetera, et cetera. All right, so get excited for that. So that's it, guys. Like I said, just tough market here, of late, but it's starting to reveal itself. And I'm not saying tough because it's hard to trade. It's just that, again, it's up, down, sideways, like Contra, cheat code. You got to know how to trade it, basically. That's why you can't be a permanent trader, a directional trader, one directional trader. You got to be, able to trade the market in all directions, basically. Right? If you don't want to naked short, buy the puts. Right? You don't want to risk going long on some of these overly expensive stocks like Tesla. Buy the calls, buy the fractional shares. And realize that you can trade the market, however it presents itself to you, and you don't have to be stuck, with a perma bull mentality or a perma short mentality. I'm here for the opportunity. If it's moving, I'm there. Be it up or down, I don't care. Whatever. You're not going to never hear African Poirier speaking from a place of self-righteousness. Oh man, I want to trade one way. That's it. Well, yeah, if that works for you, that's fine. But I am an opportunist. If it's price action and it's legit and his books are good, I'm there. Simple as that.
That's right.
And that's, I understand. Whatever, they can close the market, whatever. Okay, come square.
Palmer from BTIG says, while the company's 2Q18 results were solid, the company's 3Q18 adjusted EPS and adjusted EBITDA guidance was light versus consensus expectations, as was its full year 2018 adjusted EPS and adjusted EBITDA guidance. It appears that Square was unable to surmount what had been a very high bar. However, other analysts were more bullish.
That's why I shorted it.
Well, some may nitpick given
a lot of people like, no, man, Square's gonna beat. Square's gonna beat, man. Square, I like Square. I use Square as a merchant service in my business. But again, I deal in the paper trail. The paper trail related to them have a lower guidance. And that's because, again, they're in a competitive market now. You got Apple Pay, Samsung Pay, all the other stuff now. Venmo that charges for free. It's like how Robinhood trading platform is to TOS. Yeah, TOS will be Square, but Venmo gonna be like Robinhood. But guess what? Robinhood got free commission-based option trading now, free commission-based crypto trading now, free extended hours trading. As of today, they got free extended hours trading now. No more have to pay for Robinhood Gold just to be able to trade after hours anymore. It's free. It's a cumbersome, clunky behind, ratchet behind platform at times. I get it. But if you learn how to maneuver it, its rickety ways, you can save, make a lot of money. And I've proven it to people. I say, you know what, people always talking trash about Robinhood, and that's fine because I don't care about it either one way or the other. Can it help me still get to the bag? You know, and again, I just show people, you can make $3,000-4,000 on a day on Robinhood. We've been doing it with these options lately. Yeah, I had a $2,000 day on Robinhood. What was that? Monday or Tuesday? Monday or Friday last one of them days. Then a day before that, I think I had another day was like I crushing it, 1,000 plus, whatever. I'll be tearing Robinhood up. People thought that travel, I'll be getting to the bag. I ain't giving nobody no money for it. I ain't have to pay no commission fees. Now I got TD Ameritrade and Trade Next and all that stuff too, and USA and Ally. I got all them accounts too. Yeah, but again, when I'm trading on the go, when I'm mobile and I'm moving about, all these tasks I've been having to do lately, Robinhood, get it in. If you still know what you're doing, it doesn't matter. As long as that order get through, right? It matters in a lot of ways, but y'all get my point. As long as you still know how to make it happen, hey, you get it in. Yeah, I was literally meeting with my my housing broker or my housing agent. They got, obviously going through the process, helping them get the house, and was going over some numbers and looking at the property and all this stuff. And I'm trading at the time. We sitting there talking and going over some legalese stuff about the house and all this stuff and attorney stuff. And I'm trading. That was the day actually I was trading Whirlpool. And he's like, yeah, so Willis, what do you think about Netflix and all that stuff? And we were talking, we got to talking, and I was like, come over here, Rich, let me show you something. I pulled up my little cell phone. I said, let me show you something. All right, and I know you commission man minded because you're agent. I know how this stuff go. Let me show you something. This is what I made in the last 2 hours. I showed her one of Whirlpool contracts. At that point, I think it was up like $1,300. I said, that's just one contract. I got 4 of them. And he said, how you do that? I said, that's option. That's the power of options. And he was like, holy, you could fill in the blank. He said, this is what you do, man? This is what you do? I said, yeah, this is what I do. I'm an investing trader. And I don't always have days like this, but I'm becoming more consistent than I ever been in my life in this, in my career at this, because I'm getting better. But this is the potentiality though. That's the whole point. You can make, $3,000-4,000 in a day, $7,000-8,000 in a day. At 17, my biggest, y'all know my biggest was like $20,000 in one day. 20,000, it was like 20,900 and some odd dollars in one day. My biggest ever. Before that, my biggest one before then was like 17,000. But that's just trading common stock outright. I just use leverage. Right? But now that I'm trading options, oh come on, y'all already know. Right? So again, this opportunity, man, this opportunity is always around us, And I say 20,000 in one day, I mean I did that in a few hours in the intraday. Now I swung some trades, and I had a $35,000 day. My $35,000 day came with me swinging some shares into earnings, into some trades, and also trading it throughout that whole day, which you can still consider it one day. You consider it one day. Because again, in a 24-hour period, even with the swing, it brought me into the next day, in that position up, and I leveraged it into that day off the movement, and I ended up over $35,000 in one day. So yeah, I guess you could say technically, yeah, I had a bigger day than the 20 outright. And 20,000, that was a complete intraday. That was meaning I bought it in that same day around that morning, and I sold it, like 3 hours later, 3 hours and 30 minutes later, I sold it, and I was up like 20 grand. Yeah, you're 100% right on your head and go. Option has leverage, but it goes both ways. That's it. Again, you got to make sure you're on the right side of the trade. It's all about making sure that you're on the right side of the trade. And again, you can have all the best due diligence, all that, this and that, the best technical analysis, best fundamental analysis, best understanding of the market sentiment as a whole, and the market still will burn you. We've seen this happen several times. Look at Tesla going higher. There go Tesla going higher. It didn't put me in the red after hours. That's all right, but I'm already up big on the day. It just pretty much just erased all my after hour gains and Tesla spiking up. Again, that's a cult following. That's why Tesla's spiking up. That's a cult following. They want to prove everybody wrong. even though the numbers don't reflect the value of what it needs to be. But again, that doesn't matter in the game of investing, because if you're making money, it doesn't matter if you right or you wrong. Are you making money? That's what matters. And because of that, Tesla is ripping after hours. And it's burning up shorts right now. It's frying short sellers right now. Y'all know he has a big stickler against Tesla shorts anyway, Elon Musk, right? Because he has this big ongoing battle with short sellers all over Twitter. He stayed Twitter banging. But again, Tesla just crushing it after hours. So guess what? Tomorrow, if it's still holding up at these levels and the buyers come in tomorrow because they want to play the price action because it's so up, I'll get right in and I'll play it long. Or any signs of weakness tomorrow, I just short the top and bring it right back down and get that money right back. I done made so much money off Tesla over the last couple of weeks as a whole, shorting into it. It's ridiculous. It's ridiculous. You know, but again, that's you know, that's the game. That is the game. All right, so they talking about crypto. So I'm gonna let the CNBC run a little bit here. I am about to get up and go handle a quick little task. I'm gonna let my screen keep obviously, you know, keep sharing my screen obviously. But I'm gonna leave CNBC open as well so you guys can hear in the news. You know, for you guys that are still hanging around. I do appreciate you guys. Like I always say, man, you guys are awesome. I appreciate you, family. You guys are family to me. And you know, again, what an awesome day we done had in this market. You know. Yeah, they're on the earnings call. Now I normally do earnings call too, because normally I open up the mic, you have to hit an earnings call. I didn't have nothing set up because I was trying to get it set up so fast before the bell, because I was doing other stuff. I didn't have time to get all that stuff prepped. But again, you know, maybe CNBC will open up little snippets or excerpts of what the conference call was, what they're talking about, so you guys can hear that. If you already don't have your own TOS up, you think it's when I'm watching the Trader TV yourselves, but I'll leave the mic open so you can hear what's going on over here. All right, so yeah, you say he's cranking the stock up on the earnings call. Yeah, of course, he's pumping. Everybody know Elon is good at pumping the stock. He has to, because he has to keep everybody interested, right? It's like like a prostitute. Right? She got to walk the strip in the best high heels, be the loudest out there, do all the most wild and flamboyant things to garner attention, because that she's trying to look for the John. She's looking for a John. And Elon looking for Johns every day, because he know at this stage in the game, the company's valuation is not warranted his value of production output. So he needs to keep people interested, keep the stock up, so he can keep borrowing money against those shareholders, so he can continuously so-called innovating to get his card up to speed to the point where he can become a profitable company. He's marketing and soliciting all in one, and trolling all in one. In the discussion, drop the mic. That's basically what's happening here. Does not warrant the book value, but again, cult following, revolutionary product, CEO all over the place. Right now, it's just like whatever. I need y'all to survive, basically. I need y'all to keep me surviving. And basically that's what's going on. But that's, again, don't hate the player, hate the game. Hate the game, but don't hate the player. But anyway, I'll be back, guys. Let me get up and handle some business here real quick here. Great day in the market, though. Overall, great day in the market. I had a great day. My option trades were I crushed NBIX options long in the earnings, and I bought the outright stock long. Made good ton of money on that. I just had a great day, man. I've been having under so much pressure. I've been under so much pressure too lately with all this stuff being happening around me, and just being in a position to just get to the bag still, man. Yeah, great day, great day. So again, can't complain, won't complain, and I am humbled.
Welcome back to Fast Money. Shares of Express Scripts getting crushed today, now volatile in the after-hour session after reporting earnings.
I was trying to see if I can go pull the thing up real quick.
Is now taking
Let's see if I can. Again, if you like, guys, share it a little bit. Even just after hours, it don't really matter. Don't share it. If you like it, like it. I'm trying to pull up something real quick.
When you think about the bombshell that was dropped in the form of Carl Icahn's news this afternoon, the activist investor reportedly has built a stake in
Carl Icahn at it again.
To oppose its proposed merger with Express Scripts.
Him and Bill Ackerman, they bosom buddies like Dumb and Dumber. They fight each other about these little biotech companies and so forth on, and all kind of little stuff, whatever. But
his issue with it is that the price is too high. It was worth about $54 billion when it was announced, or about $96 per Express Scripts shares. And you can also see that Express Scripts has not traded up to that amount. It's about $74 a share right now, so about a 20% delta from when the deal was announced.
Real time.
In addition to the price issue that Icahn reportedly has with the deal, there are a couple other things that have emerged as pressures to Express Scripts' industry since the deal was announced. So one of those analysts point out is Trump's drug pricing blueprint and his focus in it on the pharmacy benefits managers industry and the rebate structure in drug pricing, that causing a lot of pressure in that space. Of course, the other one is Amazon's acquisition of PillPack getting into the space and causing a lot more pressure on this industry, guys. Those emerging and even building since March. Shareholders are scheduled to vote on this deal August 24th. So a lot of activity to keep watching until then, Scott. Back to you.
Yeah, looking forward to this still developing story. Mick, thank you so much. With Icahn now attempting to block the deal, what does it mean for shareholders of Express Scripts, Guy?
Well, Express Scripts can't be happy, and I never thought really Express Scripts was all that interesting anyway. I think Mr. Icahn is onto something. I think the real play is, and we've been wrong for a while because I thought it was value for a long time, but Cigna's just too cheap on valuation. I mean, this stock got crushed earlier this year. If you like Aetna close to 18 times, I think you got to love Cigna at 12.5. So just in terms of a value play with Icahn in it now, I think it's Cigna all the way.
Okay.
No, that's it. You don't want to ask Pete or Karen? Or
I mean, I was waiting for somebody to offer something up.
They're waiting for
There were some huge numbers out today. Molina, Humana, I mean, giant in the space. US Cigna probably would trade up.
Well,
let's see.
Reports Icahn could shake up the Cigna Express merger, sent the options market into a frenzy. Mike Coe out in San Francisco with more. Mike?
Hi there. Yeah, so we did see more than 4 times the average daily put volume in Express Scripts today. Some of it was pretty interesting because actually we did see a buy of over 4,000 of the weekly 79 puts, and that was actually before this news came out. Those are obviously profitable already, and then we subsequently saw a buy of about 1,000 August 70 puts, which obviously is an indication that the stock is going to be going lower after this news.
Yeah.
Wow.
Sorry, realized my.
So yeah, those Express Scripts guys, the puts, right? ESRX. EXRX. A lot of people buying puts. Just to put that out there. EXRX. They're buying the puts up.
Friday, 5:30 p.m. Eastern time. Thank goodness I didn't say anything worse. All right, still ahead. Tesla up in the after hours. Elon Musk just apologized on the conference call. We'll tell you what for and get instant reaction.
Yeah, the conference call died. The audio went out. I'm here. I'm reading that the conference call, or the audio went out on the conference call, basically. Trying to get it where y'all can see the live stream trending on let me see if I can fix it. Well, y'all can see the while I get up and go handle this real quick. Sorry guys. Let me see if I can. Hey, power profit over Sunline. I see you in the house, family. Good to see you, family.
All right, welcome back to Fast Money. Tesla, after hours highs right now. The conference call is underway. Let's get back to Phil LeBeau in Chicago for the details. Phil, what is Mr. Musk saying on this call that has the stock rising?
Well, it's a couple of things, and we'll play the soundbite from him in a little bit about profitability. That's why the stock is moving higher, but we should make two quick notes because this gets a lot of attention. It has since the last earnings call. First of all, the tone for Elon Musk, much more conciliatory. He's not combative and prickly as he sometimes can be. And along those lines, he has apologized to Tony Sacconaghi, who asked the question last quarter, and he was told, hey, that's a bonehead question. That's the notes in terms of the tenor of the phone call. Why is the stock moving higher? Here's Elon Musk talking about where the company is now in terms of profitability possibilities starting next quarter.
Our goal is to be profitable and cash flow positive for every quarter going forward. Now, obviously, there's a big recession or there's a severe force majeure event that interrupts our supply chain. That's not always possible, but we're confident that provided the economy is roughly where it is today or reasonably good, and there's not a big force majeure event, that I feel comfortable achieving a GAAP income positive and cash flow positive every quarter from here on out.
Scott, you combine those comments along with better than expected results in terms of liquidity and cash burn from the second quarter, and that's why you have a stock that is moving substantially higher after hours. Scott, back to you.
All right, Phil, thank you very much. Phil LeBeau for us in Chicago. Let's get back to Gene Munster, also listening on the phone at the Plasma. All right, Gene, give me your reaction. I mean, you're the guy who wrote the open letter telling him to, get back on the program or whatever, but does this take things in the right direction, an apology to Tony?
I was very surprised, Scott, and I think it does kind of show a new tone. People don't change overnight. I want to caution investors that I'm sure there's going to be something in the next few months that might not sit right. But this is a major step forward from a very proud person to have that kind of commentary. And second, and that's kind of the shine on this quarter here, as far as the substance, his reiteration that they will be profitable into perpetuity now, I think is comforting, because that's the whole negative story here, is that they're going to run out of cash. So I think that's comforting. And one final thing to think about here is that when we look at the number of pre-orders, I'm not giving reservation numbers out anymore because you're taking orders versus reservations, but 400,000 plus, and they don't even have Model 3s in all the stores for people to test drive. As they get out into the wild, I suspect you're going to see an acceleration of growth rate from the Model 3 in the next couple of years. Very encouraging developments here on the Tesla story.
Gene, what was the most interesting thing on the call? I'm actually looking at the quote from Musk about to Tony Sacconaghi. No excuse for bad manners is what Musk said to Tony Sacconaghi.
It's a subtle point, and it's funny that we're talking about this kind of stuff, but that is the most significant part, at least in my mind, because Elon Musk is such a central part of this story, and to have some increased confidence that he's on track, I think should reassure investors that this wonderful mission that they're on can be accomplished.
Give me a final grade then. If you take everything into consideration, the numbers, Musk himself, you put Teacher Munster puts what grade on this?
This is a B+, and I think that the financials still aren't where they need to be. They still have some work to go there, but I think his commentary, his kind of tenure on the call, and I think what they're saying about continued profitability going forward, I think makes this a very respectable quarter and gives the company a clear path to continuing to move the stock higher.
All right, Gene, good stuff. Gene Munster,
thank you.
Joining us there. Back to you. Right, he apologized to Tony, even though you had no problem with his behavior. One of the few.
Well, the stock price sold off, so I had a problem being long. But other than that, you want a CEO that defends the stock. He didn't defend it the proper way, but I do applaud him for not being bashful when people come at him. He goes right back at them. So yes, he did not say it properly, but I do appreciate that he is combative to analysts in his name. Now, having said that, stock's trading at $325, up 8%. It's infamous for getting back those profits the following day during trading. So you have to watch this name. It runs into resistance at 329 and 340. So there's some hurdles here that we have to do to get back to that 373 really high in the clouds price that we just saw just a handful of weeks ago.
I think the B+ makes total sense, because what did we really, we knew they'd probably miss, right? I mean, there are a lot of things that we basically kind of knew going into this quarter, but addressing the financials, that I think was the most important thing. And we look at what their cash position is, and that's something. The efficiency of cutting back on some of the CapEx, that's something. So they're giving up a little something, Scott, becoming more efficient, which is something absolutely had to do. So I think it's very important. I like what Steve's saying, though. It gets up in this level. Does it pull back a little bit, or can it get through that 329?
Karen, the apology?
Well, I like the apology. I mean, the idea of having this visionary CEO who's also sort of more reliable and calm and not so emotional, I think is important, particularly if they need to come back to the dead one.
Yeah. All right, let's do final trades. Go around the horn. Pete, you're up first.
You know, we had Square earnings tonight. PayPal was just a couple of weeks ago. I really like PayPal. It's sold off. I think it's a great opportunity after selling off to these levels.
Karen, fine.
Yes, well, I'm going into earnings tomorrow. CBS should be interesting.
All right. Steve Grasso.
Square, it's about services. I've been along on this name since before it was a teenager. 12 handle on this name. I'm staying long. Square.
You back with us tomorrow?
I am.
Giddy, say, Pete. Giddy up. You know what else is giddy up in?
Well, cell gene.
You're darn right it is.
Yeah, it is.
Biotech. We talked healthcare. Biotech, baby.
All right. Thank you very much. Does it for us. Mad Money starts right now.
My mission is simple: to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Kramer. Welcome to Mad Money. Welcome to Crane America. Other people want to make friends that are trying to make some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CBC or tweet me at Jim Kramer. A day like today, Day where the Dow dropped 81 points, the S&P lost 0.10%, Nasdaq advanced 0.46%. Thank you, Apple. Makes you feel like you should never get comfortable with the industrials, even the best of them, because they are precisely the companies that might end up being sacrificed on the altar of beating China. That was the takeaway today, pretty much the opposite of yesterday. On Tuesday morning, we got word back channel talks between Treasury Secretary Mnuchin and the Chinese government. But then, after the market closed, we learned that the White House might be upping the stakes in the trade war. That, combined with the zero-sum nature of Apple's success as it romps toward the $1 trillion market cap, define today's mixed session. First, let's do some stipulating. While there are free traders in the Trump administration, including Chief Economic Advisor Larry Kudlow and Treasury Secretary Mnuchin, their free trade rhetoric does not extend to China. As things get more grim for the Chinese economy, which is exactly what's happening when you look at the data, you better believe the president wants to accelerate the process in order to force China to open up its markets. That's why Trump is weighing whether to increase the suggested tariffs from $200 billion worth of Chinese imports from 10% to 25%. Now, the president has two advisors, Mr. Outside, Robert Lighthizer, he's the U.S. Trade Representative, and Mr. Inside, Peter Navarro, his Director of Trade and Industrial Policy. And these guys are definitively not free traders. They believe that China has totally taken advantage of us. They see trade in zero-sum terms. There has to be a winner and a loser. Now, what would winning look like to them? Well, they want no more joint ventures with bogus Chinese companies that steal our technology and take half of our company's profits. No more targeting American industries like steel in order to create jobs in China by destroying jobs here. No more dumping either. These guys get a lot of flack for being protectionist, but when an American express gets approved to do business in China, it shouldn't have to do it in a joint venture. When a Qualcomm tries to merge with NXP Semi, the Chinese government shouldn't block it on some sort of bogus monopoly theory. When our industrials want to do business in China, they shouldn't have to give away their trade secrets. Lighthizer and Navarro want China to operate like every other country we do business with. And despite all the hand-wringing about how tariffs destroy commerce, I think the stock market's been doing pretty darn well. So, in part because of a budding perception that the Chinese have more to lose than we do. There's dissent among Chinese academics we just learned about the direction of the government's stance with our trade policies. There's a recognition that the decline in exports and the layoffs that come with it simply may not be tolerable. That's why the White House believes we can win this trade war. Now, it's possible they're misreading the Chinese government. Maybe they'd rather take the pain than be seen giving in to the West. But there's reason to think that's not the case anymore, that the war's winnable. That's why it's really hard for the president to say, you know what, we got to start worrying about Boeing sales or Caterpillars or 3Ms. No, that's not his agenda. I joked this morning when we came up with FANG. Now maybe we need a Navarro basket, an ETF with a group of stocks that goes up or down on the truces and turmoils and slings and arrows of a trade war. You see the Chinese-oriented industrials rally off of Steve Mnuchin's constructive rhetoric. You buy a Navarro basket made up of Boeing's, Cummins, Honeywell, United Technologies, 3M, and a bunch of others. Then before the boom gets lower on the Chinese, you sell, or maybe you even short your Navarro basket. And then, now today's other big storyline, Apple, is also kind of a zero-sum game. When Apple does well, it's so powerful these days that unless you make components for their hardware or you've got an app in their app store, their stock may not benefit nearly as much as you'd expect. Even Apple suppliers can have a tough time because Apple has the bargaining power to, let's say, hurt, if not crush, their gross margins. In the trade war, Apple's a bit like Switzerland. It's a dominant company in so many markets because while it's only the third largest cell phone maker in the world, it owns the premium market, the most lucrative portion of the entire mosaic. Apple's been making a killing in Greater China, putting up some fabulous numbers there for the quarter. But what really makes them immune to tariffs, I think, is employment. Apple suppliers and assemblers put hundreds of thousands of people to work in the People's Republic. If China were to slap a tariff on iPhones, they'd actually be cutting off their nose to spite their face. More important, in the stock market, Apple doesn't generate a lot of pin action. In the old days, people thought of it as a tech stock, but these days people are realizing more and more that with its incredible ecosystem, its fantastic brand loyalty, and of course that service revenue stream, Apple's more like a consumer product stock, razor blade model. I just wish some major Wall Street house would transfer coverage from tech to consumer products. So we can see how much cheaper Apple stock is versus some really good companies, but that are very expensive. Clorox, Procter & Gamble, Coca-Cola. In short, what's good for Apple is good for Apple. But what's bad for, say, Facebook is bad for a vast swath of tech stocks. Apple punches below its weight in terms of pin action. Facebook punches well above its weight, and right now it's punching hard. Makes sense. Facebook represents advertising and cloud privacy issues and bad press. It's easy to extrapolate from Facebook. Apple, on the other hand, is kind of a sui generis situation. Hard to extrapolate from them. One other thought. This market gives you endless buying opportunities. We saw the banks get slaughtered when rates were going lower, right? Now rates are going higher again, and the Fed signaled today they're going to keep rising. The banks are superb investments, very cheap stocks. Drug stocks got slammed off of some presidential criticism, but then their earnings came out and they were so strong that the stocks were too cheap. Suddenly they become beloved again. Today's hated group, the retailers. Many of them got crushed from rumors that business isn't that strong. I'm not buying that. I think the last 3 months are the least important months of the year for retail, and I do believe that back to school will be quite robust. That means you'll have a lot of places to win. I know there are concerns about the new tariffs. If they're put in place, won't they hurt the retailers? I'm not as worried as many others because I see them moving private label apparel business out of the People's Republic for manufacturing into other countries. I suggest you use this weakness to buy those stocks. Now, I know that the declines in the industrials are more stark and vicious than the rallies. And that creates a level of fear that can shatter confidence. All I can say is that you shouldn't own these industrials unless you think that we're going to win the trade war relatively soon. I think we will, as long as people remember that winning doesn't necessarily mean that China has to lose. I think it just means that we get to win as much as they do. The bottom line, if you can't deal with the volatility, if you can't use the panic attacks to buy. Gold index funds, will you? Because the moves will only be exacerbated until the Chinese blink. And then you'll catch a move that could be extraordinarily bullish. But until that happens, the forecast remains delicious pleasure followed by maximum pain. Now, where is that Navarro ETF when we need it? Let's go to Bruce in Texas. Bruce.
Booyah, Jim.
Booyah, Bruce. What's up?
Well, my question to you is about Alcoa. I've been following it over the last few years, and I've been particularly interested in the contracts that they've obtained, Ford, NASA, Boeing, and feel that that's very supportive to their bottom line. And my question to you is, with the tariffs that have come out, it seems the price action has actually reacted negatively.
Well, let's remember that there's Arconic. Arconic is the one that provides the a lot of these products. I mean, Arconic makes the parts of the engine for the airplanes. It's Alcoa is the raw Alcoa aluminum maker, and they're not doing that well. That last quarter was not a strong one. What have they been hurt by? Tariffs. Stuart, New York. Stuart.
Jimmy, how you doing? Is it hot enough for you?
Yeah, I guess so. I mean,
I got a good speculative buy on Chesapeake Energy. They're reducing their debt, holding on to cash, and it looks like oil has bottomed out. So I want to get your opinion.
You know what? They sold the Utica properties. We actually did our show from the Utica properties when the late Aubrey McClendon was alive, and they sold them for, I thought, next to nothing. I wasn't happy with how much they got, and I didn't think it really helped their debt. Plus, natural gas prices refused to lift because we keep finding, we flare more natural gas than we use. So I'm going to have to say Ixnay on the Chesapeake. It actually just had a nice move up, but I would do something. Fred, Maryland, Fred.
Hi, Jim. It's a pleasure to talk with you.
Same.
My question is about a Biomed, ABMD, which manufactures a heart support pump.
Right.
The stock has had a phenomenal growth. In year-to-date alone, the stock prices rose about 235% to a peak of 450 in June. Just prior to reporting earnings on July 26th, the stock was at 430. From what I could determine, most of that report was very good, and yet the stock plummeted in just 4 days to 355, down about 17%.
Well, look, Fred, I agree with you. I mean, look, these stocks are highly emotional stocks. We've seen this with Edwards Life Sciences a lot, and Edwards has come back, and I think ABMD is a very good company, and it'll come back. Look at Dexcom. Remember when that was just crushed? Then reported the closing was terrific. Medical device stocks are inherently volatile. I think you've got a good one. If you can't handle the heat, well, then just go index fund, because these wild moves are going to keep coming until China blinks. if they play. Oh man, buddy, tonight, there are two legendary names that both reported yesterday, but they couldn't be further apart. I'm comparing P&G and Apple. They don't feel like moving from the couch? You don't have to. I'll tell you how staying in the familiar comfort of your home can make you some money. And the grass might not seem greener today for AgPro shareholders, with the stock in the red after earnings. But could the company still fertilize portfolios over the long run? Why don't you stick with Kramer?
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.
If your grandfather hadn't worn it, you wouldn't exist. That's the inscription on the back of my Old Spice deodorant bottle, and every time I read it, I smile because, indeed, my grandfather used Old Spice. And truly, in the mindset of my era, that's exactly why I buy it. I stayed loyal to it from the days when I first needed to wear deodorant, or at least when I first realized I needed to wear deodorant. Will I ever switch? Nah, no more than I would ever switch from the Apple ecosystem to some who cares handset company. But Apple gets a heck of a lot more out of that brand loyalty than Procter & Gamble, the parent of Old Spice, does. Yesterday, Procter & Gamble reported in the morning and Apple reported in the evening, and they couldn't have been more different. If there was a theme running through the Procter conference call, it's that people around the world change their behaviors and preferences rapidly, often based on price. Brand loyalty is a real challenge to keep, something they're going to put to the test now with a 5% price hike on Bounty, Charmin, and Puffs. I think it's a risky bet for one of the world's largest consumer products companies, as nobody can guess if the price will stick or if competitors will even follow. Management acknowledges that raw costs have skyrocketed, and they have to pass these price increases to their consumers. or some think risk extinction. Maybe that's fine for tissues, but with important lucrative franchises like grooming already decreasing 3%, it's an open question whether Procter can possibly get away with it for some of these products. Now let's consider Apple. It's got a 96% customer satisfaction rating on all of its products. A list is quite prodigious these days, including a 98% satisfactory level on the latest iPhones. Remember, those were supposed to flop, right? No one was ever going to buy a phone with a pain-in-the-butt facial recognition for $1,000. Totally wrong. Most popular ever. As CEO Tim Cook says, the customer sees the value proposition, seizes it. Or another way to look at it, the buyer's willing to pay the freight. Apple has a $9.5 billion service revenue stream growing this quarter at a 31% clip year over year, and not to mention 300 million paid subscribers. When you look at those customer satisfaction numbers, when you can pick up market share as easily as Apple can because of its reputation, then sure, you can get away with raising the average price of your phones from $606 to $724 as they did this quarter. Now, the most important number in the consumer products lexicon is organic growth. I like to think it's a sign of winning through innovation, adding new categories and product lines. Procter gave you a paltry 1% organic growth this quarter. Apple, now there are so many different growth measures, but all of them point to what I can only describe as a double-digit blend, and a consistent one at that, with accelerating revenue growth. It's not just new phone sales that get customers to lovingly embed themselves deeper and deeper into Apple's web. Tim Cook talked about how an Apple Watch may intrigue an Apple phone user, and vice versa. Procter & Gamble, it has no ecosystem anymore. Nobody links any of its myriad products with each other. I used to use Old Spice body wash until one day I checked off a box for bath wash from this Dollar Shave Club. And now it just keeps coming and coming and coming down automatically and endlessly. One less item in the grocery bag, so I ditched Old Spice. They didn't even have that product in Grandpop's day, so it's no betrayal. Oh, and let's not bury the lead too far. I always used to use Gillette razors and blades, but I switched, even though I do like them. Why did I do that? Because you know what? I hated chasing down a clerk to open the stupid plastic case they're hidden behind. I think Gillette will soon need to cut prices dramatically if it wants to maintain its share. Needless to say, Apple shouldn't have a problem. Let's get back to the Old Spice example. That grandfather inside jokey come online on the back of the Old Spice container. Do you think that means anything to the Gen Xers and the millennials? Brand loyalty, an oxymoronic term in the traditional packaged goods industry. While I'm slinging some truth at you, in the new world, where are people increasingly buying things? Online. You don't even see the other side of the bottle, the side where the most promising part of the Old Spice shtick lives. Even if they knew what their grandfathers used, it no longer means anything. Now here's the punchline. Procter & Gamble stock sells for 17 times next year's earnings estimates. Apple, with a stock that I tell you to own, not trade, sells for just 15 times next year's earnings estimates. And that's without backing out its massive cash flow. How long is that? I don't know. You be the judge. Let's go to Bill in Georgia, please. Bill.
Hey, Booyah, Jim. How are you?
I'm real good, Bill. How about you?
Good. Hey, real quick, my question is on Newell Brands, symbol NWL. As we know, Carl Icahn has taken a position in this company, and I believe he's actually gotten some board seats. My question is, do you believe that this company is on the right track? I know there's supposed to be a stock buyback, but I haven't really seen a big enough bump for that. I want to know your opinion.
Remember, Carl's in, but he's friendly. It's Michael Polk that runs the company. He's got a 3.5% yield. I think that they're going to get a breakout quarter, not this quarter, but next quarter. A lot of things have gone wrong, including raw costs, but I think those can turn. I am a believer that the stock is going to work here, but it is not going to work like that. Brand loyalty doesn't mean much anymore, and that's bad news for P&G. Apple, on the other hand, it's so embedded in your life that you pretty much have no choice but to stay loyal to that ecosystem. Put more mad money in pizza, video game, parking on a couch. No, I'm not talking about your college years. I'm revisiting the stay-at-home economy to tell you which stocks stand to benefit. Then, I'll clue you into some new ways to profit from the rise in popularity of chilling at home. It's a 1-2 punch. And ADCO CEO has plenty to say to Donald Trump the last time he joined us.
I think right now we have people in Washington who don't listen. They don't read, they don't listen, and they have a maybe not the brightest background, I would say.
So now let's see if his message to Washington remains the same. So stick with For the past couple of years, I've been obsessed. I've been beating you over the head with the idea of the stay-at-home economy. The idea that there's so much new technology that allows you to eat and order things and be entertained right from the comfort of your own couch. So how's the stay-at-home thesis holding up? A year ago, I recommended a bunch of stocks as a play on Steam, and most of them have done incredibly well. The only real question is whether or not they can continue to be, let's say, be standouts, except for a couple of cases. So why don't we take a look? Let's begin with the food place. The companies that make it possible to spend the whole weekend without ever leaving the house. All right, we got a couple here. First, there is Domino's, okay, Domino's Pizza, which I've spent years calling a technology company that just happens to be a pizzeria because their digital business is so good. And look, these guys have been clearly doing something right because the stock's been a gigantic winner. It was trading at $10 when I first started recommending it a little over 8 years ago. It was at $170 when I first called it a play on the stay-at-home economy in November 2016. Now it's at $270. That's right, $270. 10 to 270 with some special dividends. It's up nearly 60% in less than 2 years. Of course, Domino's has pulled back from its highs recently as the company reported a less than perfect second quarter, and it's lost its longtime CEO, Patty Doyle. But you know what? I liked what I heard from the new CEO, Richard Allison, when he came on the show a couple of weeks ago. Plus, for the better part of the decade, buying Domino's in the dips has always been the right move. I don't think it made any difference this time. Next up, well, there's Grubhub. Something we believed in when everyone else is, it's like, oh, come on, that's a commodity delivery service. No way. The online ordering platform is a huge part of the stay-at-home economy. Because there's another aspect to this whole thing. It's not just about being able to eat or watch whatever you want without leaving home. It's also about never having to speak to another human being. I've seen this in action. Millennials hate talking on the phone. They hate talking. Grubhub lets you get delivery or takeout just by going to their app or their website. No wonder the stock's been on fire. It was trading in the 40s when I spoke to the CEO in May of last year. Now it's at 125, effectively tripling in less than a year and a half. The most recent quarter here, it was stunning. Setting the stock surging 23% last Wednesday. That's right, one day. Since then, though, the whole NASDAQ has sold off hard, including Grubhub, which is down a quick $16 from its highs. I think it's a steal here. Grubhub's got nothing to do with the weakness of Facebook and Twitter, and we know for a fact that their business is on fire. Let me throw in two quick additional food plays, McCormick and Tyson Foods. McCormick is the big maker of spices and seasonings. Tyson's all about frozen beef, pork, and chicken. Basically, you're planning to cook your own food. They're essential. After marking time for most of last year, McCormick stock caught fire in the wake of the most recent quarter. I continue to be a huge fan. Skeptical? Here's what I want you to do. I want you to go to your local Walmart, like I'm about to do, or at least show you. Get this. You know what? You take a look at the walls of French's mustard, as well as Frank's hot sauce, but I wasn't obsessed about that when I took this picture in Louisiana. And the aisles are chock-a-block with their spices, too. Wow, what a picture. Tells 1,000 words, doesn't it? Tyson, on the other hand, has been a real dog lately. It's down 29% year to date. Ouch. Now, they had to deal with a host of issues from product recalls to trade woes. Best thing I can say about Tyson is that the stock is now dirt cheap, selling at 9 times next year's earnings estimates. But it was a miserable conference call that I just got off of with them, and I got to tell you, there are easier ways to bargain hunt. I'm going to take a pass. Next component of the stay-at-home economy, video games. The rising popularity of games like esports has turned this into a huge market as the technology behind video games just keeps getting better and better. Plus, you've now got a whole generation of adults who are practically raised by Nintendo. Which brings me to the big three publishers, Activision, Blizzard, Electronic Arts, and longtime Kramer fave Take-Two Interactive. I've been recommending all three of these stocks for ages, but if we just look at how they've done over the past 2 years, the game's pretty stunning. Take-Two's up nearly 180%. Strauss-Zelnick doing a great job there. Activision's up 82%. Bobby Kotick. Worst performers EA. It's still around 66% over the same period, though. Now, 2017 was a terrific year for these video game publishers, but 2018's been, let's just say, choppy. The new year started strong, but then all three stocks sold off hard in March and early April. Why? Because people were worried about the rise of these free-to-play battle royale style games, like Fortnite, for instance. And they've become incredibly popular. Do not get me wrong. Fortnite, well, it's huge. It's got 125 million active players. But when Activision, EA, and Take-Two reported in May, they showed Wall Street that they're doing great, and their bullishness translated into an epic multi-month rally. However, in the last week, Take-Two, Activision, and EA have all seen their stocks get smashed. First, EA reported last Thursday, and while the results were solid, the company's full-year sales and earnings guidance well below expectations. Since then, the stock has plunged from 146 to 127. It came in too hot that quarter. It's dragged down the rest of the group with it. Plus, the big tech sell-off hasn't helped, nor is the news this Monday that a giant hedge fund manager has placed a massive short bet against Nintendo. Even when Activision's Overwatch Esports League had Botho numbers, it didn't make a difference. Much too much hot money come their way. Where do I come down? Look, Take-Two and Activision both report tomorrow. I still like both companies a great deal, and I would view any additional weakness as a buying opportunity, unless either company says something incredibly negative that changes the equation. Honestly, though, it's hard to imagine anything that could actually seriously derail the long-term story here, especially for Take-Two, which has some huge titles coming out later this year, like Red Dead Redemption 2, which my gaming friends tell me is going to be the best ever. Oh, and let's not forget about Logitech. That's the maker of all sorts of computer peripherals, including specialized keyboards and mice and headsets designed specifically for gaming. Logitech's been dragged down by this recent tech sell-off, even though the company just reported really very strong quarter on Monday, actually raising their full-year revenue forecast. I think it's insane. I think Logitech doesn't care if the traditional video game publishers are losing market share to Fortnite. They win either way. Yesterday's pullback, a gift. Finally, last but certainly not least, we can't really talk about the stay-at-home renaissance without addressing the elephant in the room. I'm talking about Amazon. This stock was trading in the low 800s when I first rolled out the stay-at-home thesis in October 2016. Now it's trading in the 1700s, almost the 1800s. Amazon is a juggernaut. While other parts of FANG may be faltering, Amazon and Alphabet remain on fire, with Amazon gaining more than 53% year to date. This company is the ultimate disruptor in retail. Prime is one of the greatest partners in history, and it gives them a nice recurring revenue stream. And of course, Amazon Web Services is the biggest player in the cloud. It's red hot. The latest quarter here was the thing of beauty. I've long told you that Amazon could turn on the spigot and make itself much more profitable whenever it wants. That gigantic earnings beat more than $5 per share when the analysts were only looking for $2.50. Well, that proves it. We own Amazon for the Charitable Trust, which you can follow along by joining the ActionAlertsPlus.com club. I think any pullback, buy it. Bottom line, the stay-at-home thesis stands. Most of these stocks have given you tremendous gains, and many of them are still worth owning. Stay tuned after the break, and I'll tell you about some new stay-at-home plays. Let's go to Mark in Florida. Mark.
Jim, how are you?
Real good, Mark. How about you?
Good. Quick question for you. In regards to the Campbell Soup Company with the potential acquisition of Campbell's by either Kraft Heinz or General Mills, would you consider Campbell a buy or a sell at this
I never recommend stocks on a takeover basis in the show. I recommend on the fundamentals. Why is that? Because there is no taking over. That stock is definitely going to go lower. So let's just say I am not on board with Campbell's. I do like PepsiCo on an earnings basis. Let's go to Tony in South Carolina. Tony.
Hi, Jim. Thank you. This is Tony. Just want to ask about Shopify. They just had their earnings report, and they basically beat everything by 50 to 60+%. Now today it's sitting around 20% down. Why is that, and where do you see the stock going? Because I can see 200 at the end of the year.
Look, I don't know about 200, but I thought the quarter was actually good. I think there are a lot of people gunning for the stock, saying nasty things about it that just aren't true. Now, that said, as much as I think Shopify is okay, you know that I've been a huge Etsy fan, and that's been the one to own, other than Amazon. Coal oil, cows, potatoes, most of these stocks have given you huge gains and are still worth owning as a play on the stay-at-home economy. Much where I made money ahead, including some other ideas about how to ride the stay-at-home wave. Then I sit down with the CEO of AGCO. Here's what he had to say about trade tensions the last time he joined us.
It's stupid to believe that with this kind of protectionism you can achieve anything.
How does he feel about the tariffs now? And of course, all your calls rapid fire in tonight's edition of the Lightning Round. So stick with Kramer.
But it's going down. Body. Welcome to my house. Body. Welcome to my house.
Before the break, I caught you up to speed with the performance of the stay-at-home economy names. And for the most part, they've been working very, very well. But this is a huge theme. The idea that people, especially younger people, prefer to stay at home, staring at multiple screens rather than going out, it's here to stay. The thing is, given how much many of the original stay-at-home stocks have run, I want to find you some new ways to play this incredible long-term secular growth story. So let's go to work. First off, there's food. If you never go outside, you still need to eat. As I told you earlier, I still like Grubhub and McCormick, and I'm cautiously optimistic about Domino's here. Tyson Foods hasn't been working. So how about we replace it with a different packaged food play? Something like CAG, that's Conagra, which I've been recommending for a few months thanks to the strength of its frozen foods division. Conagra is a classic stay-at-home play. You stockpile their food so that you can heat it up and make it for yourself in front of the TV or the computer rather than going to a restaurant. What makes the stock attractive here? While the packaged food stocks have mostly fallen out of favor of the Wall Street fashion show, I'm a big fan of Conagra's recently announced acquisition of Pinnacle Foods. Pinnacle's Bird's Eye brand will give them even more exposure to the frozen food aisle, loved by chintzy millennials. In this business, scale is everything. The deal makes them the second largest player in frozen after Nestle, and I think they'll be able to negotiate much better terms with the supermarkets going forward. At the same time, they'll be able to get more control over the transportation labor costs that bedeviled the industry. Now, the market did not react favorably to this transaction. Many people felt that Conagra is paying too much. I think the superb management team at Conagra totally gets it. Plus, CEO Sean Connolly has a terrific track record when it comes to integrating newly acquired properties. And also, by the way, divesting. The Pinnacle deal turns Conagra into a growth food stock, and that's a real rarity. The darn thing is still pretty cheap. Think of it as a play on the freezer aisle, which is integral to the stay-at-home economy. How about entertainment? A huge part of this thesis is that these days, people have so many options on TV and on their computers, they just sit on the couch. It's become a much more attractive proposition. Obviously, Netflix has been a real game changer because they realized before anyone else that people just want to binge watch their favorite programs at home. And they've given us some fantastic shows to binge on. Why go out when you can spend a dozen hours watching the latest season of Luke Cage? Right? Or how about Fowler? See that one? Now, granted, Netflix has really gotten slammed over the last few weeks. The last quarter was a major disappointment to a lot of people. The company missed its subscriber forecast by more than 1 million users. But since then, the stock has come down roughly 20% from its highs. Even with that decline, though, let's not forget that Netflix stock is still up 76% year to date. Stock remains expensive here. The most expensive of all is FANG. This is a big but I have to say, I think that in 1, 2, 3 years, well, Netflix is still going to be a core component of what people watch. It's not going anywhere. It's still taking over the world. The value proposition of the N in our own FANG acronym is still incredible. Long term, I think the stock is still headed higher. And when you look back at this 20% pullback, you'll be probably kicking yourself if you didn't use the weakness to do some buying. Just be careful to buy it gingerly, gradually, the way down as a wild trader. Next stay-at-home entertainment play? Well, here's one I haven't talked about in ages because of all this merger and acquisition stuff. Disney. For years, this media titan has been held back by declining subs at ESPN. That's right, they've been losing some subscribers of what was once the crown jewel. Stock has basically done nothing since 2015, and as nothing did seem to trump that narrative of ESPN. So this year, Disney changed the entire conversation around its stock, which the potential acquisition of 21st Century Fox's entertainment assets. After winning a bidding war with Comcast, parent company of the network here, Disney's getting some incredible properties that they can close in this deal. They're going to be in a fabulous position to either license their content to streaming video providers on very favorable terms, or to launch their own streaming platform, which is the idea they've been talking about lately. That's what they've done with sports. They launched an ESPN subscription streaming service. I think it's working. I like it. The best part, even with the recent run, Disney still sells for less than 15 times earnings. And that's 6 years earnings. This is a premium name, a premium company with premium management. Sells at 15 times earnings. That seems wrong to me. Who else wins from the stay-at-home economy? Here's one that I keep championing. I'm waiting for others to get behind. It's called Spotify. This company is the king of music streaming. They've got a powerful subscription-based business model, and I adore the management team. They are brilliant. These guys are also so non-promotional. They didn't even do an IPO. They brought Spotify public through a weird listing process designed to help their existing shareholders to take profits. I started recommending the stock at 145. Now it's at 180. Last week, though, it was trading as high as 199. Since pulled back hard. What's happened here? Well, the stock rallied like crazy last Thursday after reporting a complicated quarter. Spotify's headline numbers weren't that great, but the user growth was phenomenal, with premium subscribers up 40% to 83 million. Stock caught fire. But then the big tech sell-off crushed Spotify, and it's now trading $8 below where it was before it reported those amazing user numbers. I think that's crazy. This pullback is a gift, and I think the stock is a buy right here. Now, let me give you a very small, very speculative name that fits right in with the stay-at-home thesis. And it's one, by the way, that a viewer brought to me, and I did the work. And here we go. Are you ready, Ski Daddy? Turtle Beach. Yeah, that's here, H-E-A-R for you home gamers. These guys make extremely high-end headphones and headsets, which have become incredibly popular with the gaming community. The numbers here have been stunning, which is what's allowed the stock to rally more than 1,400% year to date. 1,400. The analysts are still scrambling to catch up. Again, Turtle Beach is incredibly speculative. You should only buy a stock like this with money that you're prepared to lose. That said, if you want something high risk, high reward, it is still worth considering. Hey, speaking of audio, be on the lookout for the Sonos IPO later this week. A lot of people are excited for this maker of home speaker systems with double-digit revenue growth, recent turn to profitability. Kind of feels like Roku to me. We'll have to see where the deal actually prices. But if it comes at a reasonable price, well, let me just say Sonos could be a good addition to any stay-at-home portfolio. Finally, I want to give you one last tangential e-commerce play. Everyone knows about Amazon, but how about Prologis? This is a real estate investment trust that owns logistics and warehouse properties. Their number one customer? Amazon. When you order stuff online so you don't need to go to the store, the odds are good that your package went through a Prologis warehouse. In April, the company announced that it was buying another stock that we like very much, DCT Industrial Trust, for $8.4 billion, which will cement their leadership in the industry. Since then, though, the stock has barely budged. A lot of that is because the real estate investment trust has fallen out of favor. Interest rates are rising here. But Prologis isn't the kind of REIT that people own purely for its 2.9% yield. As they've come on the show, they've told us it's a growth story, for heaven's sake. A growth story that's a fabulous play of e-commerce, and therefore I'd be a buyer. The bottom line, when you have a powerful long-term team, don't just sit on your winners. Think about who else could benefit from it and augment your hand. When it comes to stay-at-home economy, you might want to add any one of these. I like a lot. I like ConAgra. How about Netflix down 20? It's down huge. How about Disney still well off its high? Spotify down big from last week. Prologis, your shopping list. Include one. Oh, and maybe even Turtle Beach, but only for pure, unadulterated, rank speculation. Mad Money's back in.
It's time. It's time for the lightning round. And then the lightning round is over. Are you ready, Ski Daddy? It's time for the lightning round. Ladies and gentlemen, I'm going to start with Sal in Florida. Sal.
Jim, how you doing? I've been watching your show for 15 years.
15 years.
Best show on TV.
Thank you.
So, Jim, I want to ask you about Dropbox. The earnings are coming up on the 9th. Should I take a position?
No, I want you to buy ahead of the quarter. Actually, I'm quite surprised that the stock did really a round trip. I believe the business is quite robust there. Not as good as Spotify in terms of going from free to paid, but I think it's terrific down here, and I would do some. Let's go to Paul in Alabama. Paul.
Hey, Jim, this is Paul from Alabama. Are you familiar with Max Linear?
Why would you buy Max Linear? Texas was just reported an unbelievable quarter. It's got that new old leadership, but I think it's a better book of business. That's what you want to do. Let's go to Judy in California. Judy.
Hi, Mr. Kramer. It's so nice to talk to you.
Thank you. Say, what's up?
Thank you for taking my call. I have a question on Terraform Renewable Energy. I did purchase some for the growth and the dividend.
Yeah, I think it's okay. I think you're taking on a little too much risk. I don't want to be able to reach for yield, and that's exactly what you're doing. If you want a 7% yield, I would actually go with that Dominion midstream, because they just raised the yield, raised the dividend, and I think that therefore it's safer. Just not my cup of tea. Let's go to Josh in Nevada, please. Josh.
Hey, Jim, a big booyah to all your staff.
They're smart. They make me look good every day.
Especially Kathy, though. She's awesome for getting me on today, and she deserves a raise.
I agree.
But anyway, I wanted to talk about AT&T today.
You're going to get an 11% yield, but the stock is going to do absolutely nothing. So you're sitting there taking that yield in, but you might be losing on your principal. That is not what I want. I want to get capital gains, and I want an increase in distribution. Not just that distribution. I think that thing is, I've been railing against it, and I continue to do so. I'm going to throw in Annalee. It's another one I don't like. Let's go to Wayne in Texas. Wayne.
Booyah to you, Jim. How you doing today?
All right. How about you?
I'm doing fantastic, buddy. Another day in paradise.
There you go. Thinking the same.
Hey, INT, World School Services.
Oh, I've looked at that a million times, honestly. Honestly, I've looked at it a million times. There's not a lot of growth there, and I think it's like a kooky little stock that doesn't have a lot of upside. How about we go to Primal in Texas, Primal?
Hey, Jim. Hi, how are you? I'm a first-time caller.
Okay.
So, Jim, here's the stock that's kind of given me some ulcers over the last year. The name of the stock is Applied Optoelectronics. The ticker is AAOI.
Fiber optic networks are so hard. I mean, geez, these are you taking your life into your hands stocks. I don't want to do this. There are so many high-quality companies that I don't need to do that for. I'm going to say, please stay away from Applied. It really is just very hard. I mean, look, I don't even feel good about Juniper, Finisar, none of these. I throw in the whole shooting match. Let's go to Jack in Ohio, please. Jack.
Hey, thanks for taking my call, Jim.
Of course.
Hey, I'm right in the middle thinking about adding a couple of good dividends to my holdings. I'm right in the middle of your book, getting back to even. So what do you still think about Pitney Bowes Incorporated, PBI?
No, you're looking for yield here, and I got to tell you, I think that distribution, that's a total red flag. And that company has done quite poorly, and I do not think that you should be in there for that dividend when I'm very worried about the actual principal. I think you could get very hurt. Let's go to Justin in Maryland, please. Justin.
Jim, how you doing? Thanks for taking my call. I'm a white huge fan. Two quick questions. What do you think about Vodafone, VOD, and I know you're a huge football fan. How are my Baltimore Ravens going to do this year?
Baltimore Ravens, they're much easier. They're not going to do well. There you go. There's some old day. I do think the Vodafone, frankly, I don't understand why Vodafone is doing as poorly as it is. But when I see that yield, again, I say red flag. I got a lot of red flag yields tonight. Remember, we do want yields that are good, but we don't want outsized. That means there's too much risk. And that, ladies and gentlemen, conclusion of the Lightning Round.
The Lightning Round is sponsored by TG. This company is confident their tractors are sexy. But will trade trauma stop their engines from roaring? Amid tariff turmoil, can AGCO still make their heavy machinery go?
Whenever we get in any kind of trade dispute, our so-called trading partners love to go after American agriculture. And sure enough, that's exactly what China's been doing. If Trump wants to make life difficult for the Chinese government, they're going to do what they can to make life difficult for Trump's voters, who overwhelmingly live in rural areas where farming is a huge part of the economy. So when the People's Republic drafts the retaliatory tariffs, it's the agricultural industry that gets hit the hardest, which is why President Trump had to revive a Great Depression-era program to bail out suffering farmers. So how bad is this disruption? Get a sense of the industry. I want to check in with AGCO, the big maker of farm equipment, because while the stock's been punished of late, it's down almost 14% for the year. The company just reported a better than expected quarter yesterday. Yep, AGCO delivered a 4-cent earnings beat off of a $1.28 basis, higher than expected revenue, up 17% year over year. And the other crazy part, North America was the strongest region, up 25% year over year. So how worried should we really be about the impact of the trade war? And how is the farmer doing? Let's take a close look with Martin Reichenau. He's the chairman and CEO of AGCO. Learn more about the company and the company's prospects. Mr. Reichenau, welcome back to Mad Money.
Good afternoon.
Good afternoon. Okay, so Martin, I am confused about something. Last time, I have to admit, you had some choice words about our president and what trade wars mean and tariffs. And yet, when I look at your quarter, sir, I think that North America, which is supposed to be hurt so bad, was a fabulous area of strength for you. So try to explain to me, please, why tariffs are bad if your business is so darn good with the farmers in this country.
Well, actually, I think farmers invested, and the main reason most probably is that the farm equipment aged because they didn't buy so much during the last years. Plus, we also have some very good brand new equipment. We just successfully launched our brand new big combine harvester called Ideal. And today we received the world leading design award, the Red Dot Award, which is of course very good for us. And this thing will sell next year, I promise you.
All right, so Martin, if President Trump gives relief to farmers, I mean, really just, I'm talking about distributions from the Treasury to the farmers. Won't they go and buy AGCO equipment? Isn't that what farmers do when they suddenly receive a big check?
I think hopefully that's what they do. So we don't know exactly yet how that works. We are in contact with Sonny Perdue. You know that I know him from his time here in Georgia. We are headquartered in Atlanta, so we have a very good relationship. And what I, of course, would like to see is something they did in other countries in the world, like in Italy, Spain, and France. They call it a scrapping law. So basically, they subsidized investments of farmers under the assumption that the old equipment would go out of the country, which would be great for the environment, less emission, less fuel consumption, and more modern technologies.
All right, I want to ask you about raw costs. A lot of companies have been complaining that the cost of steel is going up, aluminum. You're a huge buyer of steel. What's it meant to your bottom line?
Well, actually, that is true. So that means our steel prices and aluminum prices went up substantially, but we price for it. So that means we can't digest that. We have a very strong focus on margins, and we will basically come up with a program for the 2 years, 2019 and 20, to basically outperform the industry. And that, of course, you can't digest price increases for raw materials, so therefore you price for it, and finally farmers have to pay for it.
All right, is there a point in time where I want to own the stock of AGCO and not worry about South America? I mean, it always seems like one country is screwing it up, but at the same time, I guess the market's too big to ignore.
I think that's the beauty of AGCO. We are so global that at the end, this does balance out. So you might have a bad year in one region, and then you have an excellent year in another region. So that means South America, yes, they struggle right now. I see them coming back strong. So our order book is excellent. And what I think is now China buys, or let's say will, and starts to buy beans from Brazil because of the problems here with the US. And on the other hand, then it looks like as the EU
comes to a deal with the US and now starts to buy beans and corn from America. So that means things are shifting around. We prefer stability and continuity, and we prefer free trade. But at the end, I think we can adjust to almost everything.
Well, I've got to tell you, I think you're much more optimistic when we spoke last, but you also just put out a terrific quarter. Martin Richard, who's the AGCO chairman, president, and CEO. Great to talk to you, sir. Thank you so much. Well, the stock is inexpensive. It's been inexpensive, and it's made you money. That money's back.